once again in the live virtual classes organized by Board of Studies of ICAI. Friends, today we are going to discuss a unique standard which is statement of cash flows. Why I am saying this as a unique standard? So students, if I talk about my component of the financial statement, right, balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows and notes to accounts. So the entire financial statements is prepared on an accrual basis, right? We all know, according to Ind AS 1, one of the general feature of the financial statement is accrual basis. Companies Act also says that if companies has to prepare their financial statement, it has to be on an accrual basis. Okay. But there is only one component, in the financial statement which is not prepared on an accrual basis, which is prepared on a cash basis, right? And which is that statement? That is statement of cash flows, right? We all are aware balance sheet is prepared as per Schedule 3 and Ind AS 1. The format is provided in Schedule 3 and the guidance is provided in Ind AS 1, and balance sheet reflect financial position and it is prepared on an accrual basis. Statement of profit and loss, again, the format is provided in Schedule 3 and guidance is given in Ind AS 1, and this statement of profit and loss and statement of changes in equity, this reflects financial performance and it is also prepared on an accrual basis. Now coming to the statement of cash flows. On statement of cash flows, the format is not provided in Schedule 3. There is no format in Schedule 3. Schedule 3 says that you have to follow the guidance and the content prescribed in Ind AS 7 for the purpose of preparation of statement of cash flows, right? And this statement of cash flow reflects cash performance, means liquidity performance. Okay. It is prepared on a cash basis. Okay. So this is the unique statement which is prepared on a cash basis in the financial statement. Otherwise, all other component is prepared on a accrual basis. And then notes to accounts. So the format is given, the guidance is given in Schedule 3 and all Ind AS are applicable for the purpose of the disclosure in the notes to accounts. And this notes to accounts provides qualitative and quantitative disclosure, quantitative and qualitative disclosures. Okay. So we all know statement of cash flow some way or other in our accounting standard. We have also covered statement of cash flows. I can see many students have joined online. Yes. So students, you have to join through the portal, right? There is no Zoom link which is provided to you. So you have to log into the portal and you have to join accordingly. Okay. So students, in accounting standard, we have accounting standard 3. And what is the name of accounting standard 3? Cash flow statement. Cash flow statement. Then student, we have IAS 7 globally. I am talking about globally. Sir, why you always talk about a standard which is global standard? Because our Ind AS are the converged version of the global standard, which is IFRS. Okay. So international accounting standard talks about statement of cash flows. Statement of cash flows. Right. And accordingly, on 16 February 2015, when 39 Ind AS were notified in India, so one of the Ind AS was Ind AS 7, and the name of the Ind AS 7 was Statement of Cash Flows. Statement of Cash Flows, right? Now, my dear friends, one thing I will tell you as a chartered accountant, and I'm not saying you are a student, you are a chartered accountant, okay? So, in accounting standard 3, the word is cash flow statement. In Ind AS 7, the title is statement of cash flows. For example, you are a article and you are pursuing your articleship, okay, and your boss, your CA, your principal has given you two balance sheet. One has to be audited as per accounting standard, another has to be audited as per Ind AS. So one thing you keep in mind, if you are auditing the financial statement as per accounting standard, the word and the title has to be cash flow statement. But if it is as per Ind AS, the word and the title has to be statement of cash flows. Sir, how does it matter? Now, let me give you a real life scenario. NFRA, have you heard about NFRA? National Financial Regulatory Authority, Reporting Authority. This NFRA is the auditor's auditor. It's a regulator. Okay. So NFRA has done an inspection of the financial statement for one of the company whose name was IGSEC Heavy Industries Limited. What is the name? IGSEC Heavy Industries Limited. In IGSEC Heavy Industries Limited, what they found, one of their observation was the management and the auditor have not given the right title of the cash flow statement. Right? They continue with the same title which they used to give in their old accounting standard, which was AS, which was IGAP. Right? After transition to Ind AS, they have not changed the title of cash flow statement. Okay, so this is the observation which is available on the NFRA portal, on the NFRA website, on their order in IGSEC Heavy Industries Limited. This is available. So what I'm trying to say, what is the right nomenclature? What is the right title? The right title is statement of cash flows, not the cash flow statement under Ind AS. If it is accounting standard, then you can say it is cash flow statement. Is that clear? Right? Okay. But when you open a schedule 3, but when you go to the schedule 3 says the cash flow statement has to be prepared in accordance with Ind AS. Sir, now schedule 3 is using a word cash flow statement. Now schedule 3 is using a word cash flow statement, right? So schedule 3 says that if I have not given a guidance, you have to follow Indian accounting standard. You have to follow Ind AS to understand the terminologies, right? To finalize the financial statement. And Ind AS 7 says that statement of cash flows, right? So NFRA told, since you have to follow the guidance according to Ind AS, and schedule 3 itself says that all the terminologies, all the meaning and the expression of the words, right, which is given in schedule 3 has to be taken from the meaning, has to be taken from the Indian accounting standard, right? So this is very, very, very clear to us. This is very much clear to us. Perfect. Great. So we are discussing and we are reading, we are going to studying a statement of cash flows. This is one of the component which everyone is aware of, right? Because either you have prepared cash flow statement in accounting standard days in your C enter, or you have audited cash flow statement while auditing the financial statement of a company. Okay. Now let's move further. My dear friends, why this statement of cash flow is very, 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 very important? First of all, you can prepare the balance sheet very easily. You can prepare the P&L very easily. The majority of the time and the mind goes to telling the cash flow statement. Yes or no? Do you agree with me or you agree to disagree? So balance sheet can be prepared very easily. P&L can be prepared. It comes from grouping, right? But this cash flow statement takes a lot of time in preparation, right? At times, we are not able to match the cash flow statement. Why? Because this cash flow statement is prepared from balance sheet and P&L, and it is prepared on a cash basis, right? For example, in Ind AS, you have a mutual fund investment. For example, mutual fund investment. Okay. In current year, this mutual fund investment is 1500 crores. In last year, this mutual fund was 1200 crores. Now, in accounting standard, these investment have to be measured at cost or NRV, whichever is lower. Assuming its NRV is higher, its market value is higher. Cost or market value, whichever is lower, was the guidance in accounting standard. In Ind AS, in Ind AS, it is at fair value. In Ind AS, it has to be stated at fair value. Assuming the company has purchased an investment worth 1000 crores, and at the end of last year, which is 31st March 25, 31st March, just a minute. Just a minute. Friends, are you able to see my screen? I don't know. Some problem is at my end. No, are you able to see the presentation? Okay, okay. Just allow me a second. I hope it is visible now. Is it visible now? Okay. Yeah. So in accounting standard, the investment typically is measured at cost if it is a long-term investment. It is measured at cost or market value if it is a short-term investment. Now, what I was telling, in Ind AS, as per the principle of Ind AS 109, the investments has to be measured at fair value. Okay. So assuming a company has made an investment of 1000 crores in the mutual fund during the year 24-25. Now, at the end of 31st March 25, the value of this investment at the end of 31st March 25, the value of this investment is 1200 crores. Why? Because the market value has gone up. The same investment, the company has not made any purchase or sale during 31st March 2026. Company has not made any purchase or sale, but the market value has gone up and it has gone up to 1500 crores. Now, when you look at the balance sheet, what is the first perception you have? You have the perception that, oh my God, 300 crore rupees. The company has made an additional investment of 300 crore rupees, right? But it is not the case. And when you look at your P&L, in your P&L, your profit was also increased. Why? Because 300 crore, this 300 crore rupees has been taken in the P&L as a other income also, mark to market, unrealized gain on the investment in mutual funds. But when you prepare a statement of cash flows, will you found any entry on regarding this investment, students? Will you found any entry, Ravinder, Kiran, Abhijit, Mansa, Rohan, will you find any entry? No. Why? Cash flow is prepared on a cash basis, right? And this is all accrual concept where you are recognizing the unrealized gains and losses. Okay. So friends, typically when you do the accounting on accrual basis. You are putting the accounting entries as per the principle of Ind AS, which is on accrual basis. But when you have to prepare the cash flow statement, you have to find out what is the cost which either we have incurred or what is the amount which we have realized. You are not going by the balance sheet to balance sheet. So you pick the number and do the adjustments so that you reach on a cash basis. Okay. So that is one. Number two, why again statement of cash flow becomes very, 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 very important. Let me tell you with the help of an example. Okay. Friends, there is a company, a sound cash rich company, a great company. Okay. So the company has, let me draw a P&L of that company, P&L. The company has a revenue of 20,000 crores. These numbers are in crores. Okay. The company has a revenue of 20,000 crores. Okay. The company has an expenses like rent expenses, salary expenses, right? Other expenses, travel expenses, electricity and water expenses. The company has an expenses of, let's say, 10,000 crores. Okay. What is the PBT of the company? The profit before tax of the company is 10,000 crores. And tax rate, assuming tax rate is 30%. So tax at the rate of 30%, it is 3,000 crores. And your PAT, profit after tax, is 7,000 crores. How's the P&L look like? Great P&L. On 20,000 crore, we have made a profit of 7,000 crore. 35% profit after tax, 50% profit before tax. A great company to invest, right? A great company to join, correct? So 50% PBT ratio, 35% PAT ratio. Okay. Now I'm giving you some more insights. Looking at the P&L, you are finding, oh my God, this is a great company to work with. This is a great company to invest also. Now, this revenue, this revenue is collected. This revenue is collected after 18 months. Okay. So there is a credit period of almost 18 months. So this revenue, this entire sale is made on a credit basis. So assumingly, if a company will sell today, the company will be able to collect the revenue after 18 months. Now, this entire expenses is on a cash basis. When I say cash basis, For example, if it is a salary, so every month end, the employer is paying salary to the employees. Every month, the employer is paying electricity bill, water charges, paying rentals, okay, day-to-day expenses they are incurring, okay, printing, stationery, books, periodicals, travel, etc., etc. So this sale is on credit basis. These expenses are on monthly cash basis, right? Tax, and you know government, either they will take advance tax, and if anything which is remaining, so they have to tell you to deposit self-assessment tax. So this tax is also on a cash basis, means during the year. When I say cash basis, means during the year, advance tax and TDS. Now, my dear friends, looking at the P&L, you found this company a great and a sound company. But how's the situation will look like in the statement of cash flows? How the situation will look like in the statement of cash flows, right? कैसी होगी situation? After looking at the cash flow statement, or which is statement of cash flow, whether you will find this company has a great liquidity performance, while in the P&L, this company has a great accrual performance, this company has a great financial performance, but looking at the cash flow, will you found the company has a great liquidity performance? Answer is no. You are absolutely right, Manoj. The company has a negative cash from operations. Now, let's coming to the skeleton of the statement of cash flows. And while talking of the skeleton, I will only touch upon the headings of the statement of cash flows. Then I will get deeper into when I'll teach you operating activity, investing activity, and financing activity. So, my dear friends, all of you are aware about the structure of the statement of cash flows. Are you aware or not aware? Statement of cash flows. आपको पता है या नहीं पता है? Of cash flows. Statement of cash flows. Okay. So Saminathan, you are absolutely right. Yes, negative cash from operating activity. So friends, in our statement of cash flow, what are the broad headings? First of all, let's talk about number point A. Cash flow from operating activities. Cash flows from operating activity. Activities. Cash flow from operating activity. In this case, will you found the positive cash flow from operating activity? What is meant by operating activity? It means operating activity means whether company is able to generate the cash from the operations, right? Whether company is able to generate the cash from the operations, okay, from the core operations, whether company is able to generate the cash or not. Cash flow from operating activity reflects whether company is able to get the sufficient oxygen to live with, whether company is able to get the sufficient blood to live with, okay. So this cash flow from operating activity shows the whether company is able to generate sufficient cash to run the operations or not, okay. So in this case, where we are making a credit sale for 18 months and we are incurring expenses on a cash basis on a monthly basis, so we have a negative cash flow from operating activity, which does not show the right picture, okay. And you know, Vodafone Idea Limited, have you heard about Vodafone Idea Limited, a telecom company in India? In case of Vodafone Idea Limited, if you see Vodafone Idea Limited, every quarter, their P&L performance is bleeding every quarter, right? They made a loss of 6,000, 7,000 crores in every quarter. Their customer churn is high. Every month they are losing customer. Every quarter they are losing customer. So one of the investor told, Mr. Birla, why should we invest? Mr. Birla, Kumar Mangalam Birla, who is also a chartered accountant, Mr. Kumar Mangalam Birla told, you should have invest in this company because India is a large country, right? And today everyone need phone. Yes or no? Everyone need phone to run Instagram, to see the reels. Yes. So the consumption of phone is very high. Three friends are sitting in a room and everybody has a phone, and while there are three friends who are sitting in a room, but everybody friends is a phone. right? Either they are scrolling Instagram, LinkedIn, Facebook, okay? So everyone needs phone. So demand will be very high, number one. Number two, but investor told, sir, why should we invest in your company? You have a negative, you are earning a loss. You are earning a loss, you are recording a loss every quarter. Why should we invest in your company? Then Mr. Birla told, you are only looking at a P&L. Look at our cash flow. Even though we are incurring a loss, we are able to generate sufficient cash. You are able to generate sufficient cash. We are able to generate sufficient cash from operations. Our cash flow from operating activity is positive. Means whatever money we need to run our operation, we are able to generate the money by our telecom services. Sir, then why there is a losses? Because the P&L is prepared on an accrual basis and there are a lot of non-cash item. Can you tell me one of the non-cash item in the P&L, in the expense side? Quickly. Yes, depreciation and amortization. Very good, Saminathan and Manoj. Depreciation and amortization. My request to everyone, and thanks, Charita Reddy. So my request to everyone, whenever I ask question, please try to attempt answer on the chat box. Okay, right? The more you engage, the more you will learn. So amortization and depreciation, one of the classic example of non-cash item. And my dear friends, in these telecom companies, when they acquire spectrum, then when they acquire telecom license, they pay a huge amount like 50,000 crores, 70,000 crores, 1 lakh crores to the Department of Telecom, Government of India. And 1 lakh crore they have paid today, but they got a license for 30 years. So it means in every year they have a amortization of, let's say, 3,000, 3,500 crores, right? So I have paid cash today, but I will have an expense on account of depreciation and amortization for the next 25, 30 years. So this telecom companies, this telecom sector is a very capital intensive sector. You made a cash today, outflow today, but you will have to amortize over a large period of time. So friends, see, when investors were looking at the P&L, they had a different point of view, but when they shifted to the cash flow statement, they have a different point of view. And same with you guys. When you are looking at a P&L, you are saying, my God, 35% PAT, 50% PBT. But when you get into the cash flow from operating activity, when you get into the cash flow statement, you found this company is not able to generate sufficient cash to run the business. It has a negative cash flow from operating activity, and probably for running the operation, either the company is using its own capital or the company is getting a funding, working capital loan from the bank, right? So you will found cash flow from financing activity is positive, cash flow from operating activity is negative. So either company will sell the asset. So whenever the cash flow from operating activity will be negative, you will find cash flow from investing activity and financing activity may be positive. Means company is selling its asset and company is raising funds and company is meeting the day-to-day operational requirements, right? The second one is cash flows from operating activity, cash flows from investing activity. Friends, this investing activity is not related to the day-to-day operations, day-to-day running of the business. This investing activity is relating to the relating to investment of the surplus funds and long-term assets in the business. Okay, investment and the proceeds from sale of long-term funds or investment in the long-term funds. Okay, long-term investments and the long-term assets of the company. For example, purchase of property, plant and equipment, purchase of intangible asset, right? Whether it is part of investing activity or operating activity. Yes, investing activity. Very good, Saminathan. Investing activity. Okay, right? Everyone is saying investing activity. What about you, Rohan? Swanlata? Yes, investing activity. Now see, cash flows from financing activity. And this cash flow from financing activity relates to the capital structure of the entity. When I say capital structure of the entity, means the movement in the funds relating to the capital and debt, equity and debt. For example, the company has raised equity share capital, right issue. Okay, the company has paid dividend. So this is what? This is a financing activity. Company has taken borrowings, company has repaid borrowings, company has paid interest. This is financing activity. So any movement of the funds, any activity relating to the capital structure of the company is related to the financing activity. Now, my dear friends, this A plus B plus C, right? This is known as a net cash changes, right? Which is A plus B plus C, net cash changes, right? Then in the net cash changes, when you add opening cash and cash equivalent, opening cash and cash equivalent, when you add in the non-cash changes, you will find closing cash and cash equivalent. You will find closing cash and cash equivalent. Closing cash and cash equivalent you will find. Okay, this closing cash and cash equivalent and opening cash and cash equivalent should tally with the balance sheet. It will not tally with the balance sheet in one of the case I will discuss with you. And if this closing cash and cash equivalent is not telling with the balance sheet, you have to give a reconciliation between the cash and cash equivalent lying in the balance sheet and the cash and cash equivalent lying in the cash flow statement. Okay, friends, I hope the context is clear to all of you. AS3, IS7, Ind AS 7. I think this accrual basis and cash basis is clear to all of you, right? And friends, this structure of the statement of cash flow, this is clear to all of you about these three activity, because you know these three activities since your childhood. When I say since your childhood means your BCom, CA Inter, you know these things. Okay, right? Everyone is on the same page. Can I have your confirmation? Can I have 10 confirmation, please? Yes. Others who are not responding, can they respond also, yes or no? Great. So we are all on the same page. Now let's begin the formal journey of the standard. Okay, friends, objective is very clear. I am not getting into reading the every word. Objective means, yes, Abhijit, you have a question, please ask. Abhijit, you have raised hand. Please ask your question. Can we able to unmute Abhijit, Ajit ji? Yeah. Are we able to unmute him? Otherwise, I'll just move to the next part. Abhijit is saying he is not able to unmute. Okay, Abhijit, can you please write your query on the chat box? Yeah, Abhijit, you can write your query on the chat box, right? So I will answer that query. So what is the objective of Ind AS 7? The objective of the Ind AS is to provide, Ind AS 7 is to provide the guidance relating to the preparation of statement of the cash flows, so that the investors, users of the financial statement will be able to know the liquidity performance of the company. Okay. This part we discussed component of the financial statement scope. This standard is applicable in the preparation of the statement of cash flow in requirement with this standard. Okay, because this is an integral part of the financial statement. Now we are discussing the last line item of the statement of cash flow, which is cash and cash equivalent first. Okay, which is cash and cash equivalents. What is meant by cash and cash equivalent? Cash means very simple. What is cash? Very simple, the money which you are having. Cash comprises cash on hand and demand deposits, right? A money lying in your bank account, is it a cash or not? Money lying in your bank account, whether it is a cash or it is a cash equivalent. Money lying in your bank account is a cash, is a cash. Don't get into that cash means money, cash means only currency. Don't get into that connotation कि कैश का मतलब जो आपके पास पैसा वॉलेट में है वही कैश है. No. पेटीएम में भी तो आप कैश रखते हो, अमेजोन वॉलेट में भी तो आप कैश रखते हो. यू आर कीपिंग योर कैश इन अमेजोन वॉलेट, क्रेड, राइट? पेटीएम, what is that? That is also cash. I have money in my Paytm wallet. Okay. I want to buy a, let's say I want to buy a pen. So I just open my Paytm, I buy a pen, I buy a pen and use the money which is lying in the wallet. I have the money in my savings bank account. I will go to the ATM and withdraw the funds immediately from wherever I am, right? So I went to Chennai. I need 5,000 rupees. I went to the Paytm. Went to the ATM, not Paytm. I went to the ATM and I withdraw the cash. I don't have to visit the branch for withdrawing the cash. So cash includes cash on hand and demand deposits, right? Demand deposits means in the deposit, in the deposit. So demand deposits means when you have deposited money into the bank, right? Whenever you demand, you will get the money. Whenever you demand, you will get the money, right? You will get the money. Okay. So Sai Kiran is saying in accounting standard only cash bank balance. In Ind AS, net cash equivalent, cash bank balance less short-term borrowings. No, Sai Kiran, this understanding is not right. Okay, so let me finish cash equivalent. Right now I am on a cash. Okay, but whatever you are saying, that understanding is not right. So what you are saying, less short-term borrowing is not right. It is bank overdraft. Sai Kiran, it is specifically bank overdraft. It is not short-term borrowings. Okay, I will cover that. Just hold on for some time. Okay, is that clear, Sai Kiran? If you write less short-term borrowing, it will be wrong. Because CC limit also covers under short-term borrowing. Working capital loan also covers under short-term borrowing. But CC limit, cash credit limit and working capital loan, these will not be deducted from the cash and cash equivalent. So guys, just hold on. Let me finish the concept. Cash includes cash on hand, the money which is lying in your wallet, in your pocket, and demand deposits, right? Now, what is meant by cash equivalent? We have touched on this concept of cash equivalent in India as one also. Cash equivalents are short term highly liquid. Cash equivalents are short term highly liquid investments. Short term highly liquid investment. What is meant by short term highly liquid investment? Means which can converted into cash within 3 months. Which can converted into cash within 3 months. Short term highly liquid investment that are readily convertible to non amount of cash. Very, very important. That are readily convertible to non amount of cash. That are readily convertible into the known amount of cash. Known amount of cash. Right. What is meant by known amount of cash? Means today, let's say if you have invested 100 rupee and you have to withdraw this 100 rupee after 1 month, I will be able to withdraw 105 rupee or I will be able to withdraw 100 rupee, for example, right? So cash equivalents are short-term highly liquid investment that are readily convertible to non amount of cash and which are subject to an insignificant risk of change in value, and where there is no significant risk of change in value and you don't have significant risk of change in value, you don't have a risk that my value will change. For example, you have invested in a fixed deposit of State Bank of India. You have invested in State Bank of India in the fixed deposit for 45 days for 1.5 months. And you invested 1 lakh rupee. You deposited 1 lakh rupee. First of all, tell me, if this fixed deposit is going to mature in 45 days, whether it is a short-term highly liquid investment, whether it is a short-term highly liquid investment, yes or no? Yes or no? Yes, it is a short-term highly liquid investment. Why? Because it is going to be matured within 3 months from the date of deposit. Within 3 months, it is short-term highly liquid investment. Whenever you deposited, you know that I will be able to get the money back within 3 months. Yes. Number two, do you know after 45 days how much money you will get? Do you know that? Yes. When you invest in the fixed deposit, you will get a receipt. In the deposit receipt, there is a maturity amount which is written there. Sir, if maturity amount is not written there, then you all have done the audit work. You all have done internal audit or statutory audit. Have you guys calculated the maturity amount? Rate of interest will always be given. Can you compute the maturity amount or not? You can compute the maturity amount, right? Let's say it is 5% per annum rate of interest. So 1 lakh rupee multiply by 5% multiply by 45 divide by 365. This will give you interest. Principal plus interest will give you the deposit amount, right? Maturity amount. So second point, whether do you know that it will be convertible into what amount of cash? Do you know the amount? Do you know the amount today? Yes or no? Yes, it is known. You know the amount? Yes. Whether it is subject to, whether there is any significant risk that the value will change, whether there is any significant risk that the value will change. No, there is no significant risk that the value will change. There is no risk. Okay. There is no risk. Okay. So whether this fixed deposit, which is redeemable, which is matured after 45 days, whether this fixed deposit is considered as a cash equivalent. Answer is yes, it is considered as a cash equivalent as per the definition. As per the definition, right? So Sai Kiran, if pre-closed in 44 days, yes, then what happened? Then you will get the money. Why? So basically, you don't have the risk that there will be any significant change in the value. If you need the money early, of course, interest will be lower, na? How can the bank will give you an interest? For example, you deposited for, let's say, 2.5 months, and you want this money in 15 days. How can the bank will give you the 2.5 month interest if you want this money back in 15 days? Of course, if there is any premature penalty that has to be imposed. But let's say today you invested in for 2.5 months, and you know that I may be able to redeem this fixed deposit in 15 days. And bank has told you, if you do the premature, if you will close this FD premature, we will charge a penalty of 1%. Then Sai Kiran, can you compute the amount, what money I will get in after 15 days? मैथमेटिक्स से तो है ना, लोन का इंटरेस्ट कैलकुलेट करना, फिक्स डिपॉजिट का इंटरेस्ट कैलकुलेट करना डिफरेंट डिफरेंट पीरियड्स के लिए, देन देयर इज नो सिग्निफिकेंट रिस्क ऑफ चेंज इन वैल्यू ना. बट let me give you another example. The company has invested in the shares of Infosys. The company has invested in the shares of Infosys Limited. Infosys is a big IT company, right? So the company has invested in the shares of Infosys. Now what happened? What happened? So the company invested 1 lakh rupee. Now this investment in Infosys shares, whether it is investment in Infosys shares, whether it is a short-term highly liquid investment or not. Investment in Infosys shares is a short-term highly liquid investment or not? Please tell me. Investment in Infosys shares is a short-term highly liquid investment or not? So tell me, if you need the money tomorrow, will you be able to get the money or not? My first point, what I have asked, tell me, my first point is whether investment in listed company shares is short-term highly liquid investment or not. Friends, if you invested in Infosys shares today, right? Tomorrow the shares will be credited in your account. Tomorrow the shares will be credited in your account. Okay? Tomorrow the shares will be credited in your account. And tomorrow when the shares will credited in your account, you can sell the shares into the market, and day after tomorrow you will get the money. And day after tomorrow you will get the money. You will get the money. Okay? Day after tomorrow you will get the money. Now friends, if you need the money if you need the money from these shares, you will get in just 3 days from the date of deposit. So it is highly liquid. It is highly liquid. For example, a company has invested in the shares of Infosys Limited. A company has invested in the shares of Infosys Limited for 10 days, right? It is short-term highly liquid investment. Number two, whether it can be convertible into cash, into a non amount of cash. Do you know how much money you will get after 10 days? Do you know how much money you will get after 10 days? Infosys, HDFC Bank, they are running at a lifetime low. I hope my PPT is visible, guys. Is it visible, PPT? Yes. Okay. Okay. So guys, these shares are at lifetime low. So do you know that if I invested 1 lakh rupee, after 10 days I will receive 2 lakh rupee, or I will receive, let's say, 10,000 rupees? No, there is a significant, and whether there is a significant risk of change in value? Yes, there is a significant risk of change in value also. So whether this investment in equity share, whether this will be cash equivalent? Answer is no. It will not be cash equivalent. It is an investment which is shown in the investing activity. Is that clear to all of you? Is that clear to all of you, my dear friends? It is investing activity, right? It is an investment. Friends, I invested in, when I qualified my CA in 2007, I know that in September I still remember in September 2008, I have invested. There is a black box in front of the PPT. Is that clear now? Sanket ji, whether my PPT is clearly visible? Okay, okay. Yes. So friends, I still remember when I in September 2008 I purchased Infosys Satyam shares. Satyam was the largest and the best IT company at that point of time. I was doing the tax audit because the tax audit season was going on, and I still remember on 28th September 2008, while 4 days back, I purchased Satyam shares at 200 rupees. And you know, on 28th September 2008, the price was 11 rupee per share. From 200 rupees, it went down to 11 rupee per share. 11 rupee per share. Right. So there is a significant risk of change in value. Had I been invested in the fixed deposit, right, of let's say 1 lakh rupee 4 days back, and if I have to withdraw the money after 4 days, let's say on 28th September 2008, probably I will get the same amount, or I will get a very small deduction, and I will get my principal back. But here my 1 lakh rupee had become, you know, 10,000 rupee, or at least, or 7 8,000 rupee. Okay. Yes. So what is a cash? Cash is cash on hand and demand deposit. What is cash equivalent? Cash equivalent are short-term, highly liquid investment which can be convertible into a non-amount of cash, and which are subject to an insignificant risk of change in value. Where there is a no significant risk of change in value is there. Friends, this cash and cash equivalent, this cash and cash equivalent includes bank overdraft also, if it form part of the cash management activity and fluctuate between the positive and the negative amounts. Friends, the company is running a current account with HDFC Bank, and HDFC Bank has given a OD facility to the company, overdraft facility to the company. What is meant by overdraft facility, and what is this overdraft facility? Friends, let's say you have 1 lakh rupee in your bank account, and you have issued checks worth 1.5 lakh rupee. Whether those checks will be honored by your banker? If you have 1 lakh rupee in your account, but you have issued checks worth 1.5 lakh rupee, if you don't have overdraft facility in your current account, whether those checks will be bounced or those checks will be honored? Those checks will be bounced, right? But now you have taken a overdraft facility, which the limit is 5 lakh. The OD limit is 5 lakh, right, on your current account. You have a bank balance of 1 lakh rupee, but you have issued checks worth 4 lakh rupee. Whether those checks will be bounced or those checks will be honored, you have a OD limit of 5 lakh rupee on your current account. Honored, since OD facility is available, it will be honored. And when you get your bank statement, your bank balance is an asset. Assets should always be positive. But will you find a positive balance in your bank statement when you get the bank statement? Will you find a positive balance, debit balance? No, it has a negative balance by 3 lakh rupee. 1 lakh rupee you had in your bank account, 4 lakh rupee checks you have issued. So how much negative balance you will see in your bank account? Minus 3 lakh rupee. Why? Because 1 lakh rupee was the bank balance, 4 lakh was the bank overdraft. or technically speaking 3 lakh is net bank overdraft. Okay. So friends, bank overdraft will become part of the cash and cash equivalent. Bank overdraft will become part of the cash and cash equivalent if it is related to the cash management activity, means if it is used for the working capital management. Generally, bank overdraft has to be used for the working capital management, right? Working capital management. And my dear friends, it fluctuates between the positive and negative amount. Means whenever you have issued checks till to the extent you have the money in your bank account, it has a positive balance. Bank overdraft has a positive, and it can be negative. It can be negative when you have utilized it. So yes, this is a carve out. This is kind of a not. This is not the carve out. Sorry, there is no change between IFRS and Ind AS. This is a difference between accounting standard and Ind AS. In accounting standard, this bank overdraft, like Sai Kiran, you were saying me na. Sai Kiran, you were telling me, yes, in accounting standard, only cash and cash equivalent is always telling with the balance sheet, right? But in Ind AS, in your statement of cash flows, this cash and cash equivalent is net of bank overdraft. This cash and cash equivalent is net of bank overdraft. So my dear friends, if I talk about this treatment of this bank overdraft, if I talk about the treatment of this bank overdraft, in the balance sheet, right? This cash and cash equivalent will come on the, asset side. And this bank overdraft, whether this bank overdraft will be netted from the cash and cash equivalent in the balance sheet, whether this bank overdraft will be netted off from the cash and cash equivalent in the balance sheet. No. So this bank overdraft has to be shown as a liability. This bank overdraft has to be shown as a liability under short-term borrowings. How this cash and cash equivalent will be shown in the cash flow statement? For example, this cash and cash equivalent is 100 rupee in the balance sheet and bank overdraft is 150 rupee. Let's say you have a positive balance in one of your bank account. In your State Bank of India, you have a positive balance of 100 rupee. Okay. But in your HDFC Bank, you have a negative balance of 150 rupee. So 100 rupee is a cash and cash equivalent, 150 rupee is a bank overdraft. Is that okay with all of you? 100 rupee is the bank balance and 150 rupee is the bank overdraft. Now, how it has to be shown in the cash flow statement? Cash and cash equivalent negative 50 rupee. Cash and cash equivalent negative 50 rupee. This is how it has to be shown in the cash and cash equivalent. This is how it has to be shown in the cash and cash equivalent, my dear friends. Is that clear to all of you? Yes. Is that clear to all of you? In the balance sheet, it is not negative. In the balance sheet, bank overdraft has to be shown in the borrowing side. In the cash flow statement, it has to be negative. And a reconciliation is required to be given. How you will give that reconciliation? A reconciliation is required to be given for this cash and cash equivalent. Okay. A reconciliation is required to be given. And how you will provide this reconciliation? Cash and cash equivalent as per cash flow statement. Cash and cash equivalent as per cash flow statement. Okay. Which is negative 50. Add bank overdraft 150, right? Then cash and cash equivalent, as per balance sheet. This is how you will show the reconciliation. Okay. Is that clear? So Manoj is asking, so this is the only case where cash will not match with the balance sheet, sir, as mentioned by you earlier. You are absolutely bang on, Manoj. You are absolutely right. You are absolutely right. Yes. Clear? Is that clear, friends? Clear? Not clear? Yes. Very good. Now, friends, let's quickly do some questions from the ICAI study material. Let me check your knowledge on this. Okay. Illustration number 1. Company has provided the following information regarding the various assets held by the company on 31st March 2001. Find out which of the following item will form part of cash and cash equivalent for the purpose of preparation of cash flow statement as per guidance provided in Ind AS 7. Fixed deposit with SBI, 12% 3-year maturity on 1st January 2004. Friends, now before solving this question, let me give you one more clarity. Okay. When we are talking about cash equivalent means short-term highly liquid investment. Okay. Short-term highly liquid investment, which are convertible into non-amount of cash and which are subject to insignificant risk of change in value. When I'm talking about 3 months, it is not 90 days, Saminathan, it is 3 months. Okay. Right. So it is 3 months from the date of deposit. When the original maturity is 3 months from the date of deposit, that will be considered as a cash and cash equivalent. Now, let me ask you a question. Okay. A company has deposited 1 lakh rupee of fixed deposit with State Bank of India on 15th January 2026. On 15th January 2026, right? So this fixed deposit is going to be matured on 15th April 2026. Tell me, what is the classification of this fixed deposit on 31st March 2026? What is the classification of this fixed deposit on 31st March 2026? Tell me, what is the classification of this fixed deposit on 31st March 2026? I hope my Excel file is visible to all of you. Yes. Cash and cash equivalents. Okay. Cash and cash equivalent. So short-term highly liquid investment means convertible into cash within 3 months. Right? So whose convertible into cash means short-term highly liquid investment means convertible into cash within 3 months of original maturity, right? Original maturity from the date of deposit or investments. Okay. Now let's discuss 3 scenarios. Scenario number A. A Limited has made a fixed deposit in State Bank of India on 15th January for rupees 1 lakh matured on 15th April 2026. B. A Limited has made a fixed deposit in HDFC Bank on 15th January for rupees 2 lakh to be matured on 15th June 2026. Okay, C. A Limited has made a fixed deposit in ICICI Bank on 15th January for rupees 3 lakh to be matured on 15th April 2027. Okay, 2027. Suggest the classification of the above deposits in the balance sheet as on 31st March 2026. Okay. Current oblique non-current, as well as the classification within current and non-current. Yeah, tell me. Tell me. What is the solution? Friends, what is the solution? This is the example, this is the question, right? And this question will solve all your answers, right? In the exam and the practical life. Solution. Solution. A, B, C. A, B, C. Okay. Right. Number A, FD. FD with State Bank of India, 1 lakh rupee. FD with State Bank of India, 1 lakh rupee. What is the classification of this FD, my dear friends? What is the classification of this FD? इसका क्लासिफिकेशन क्या होगा? FD with State Bank of India. It is current or non-current? Current. Current asset. It will be classified under current asset. Okay. Current asset. Right. FD with State Bank of India will be classified under current asset. Under current asset, what is the classification? The original maturity from the date of deposit, the original maturity is 3 months, right? So current, and it is cash and cash equivalent. Cash and cash equivalent. Anyone has any doubt here? It is cash and within current asset, it is cash and cash equivalent. I hope it is clear. Is that clear? Not clear? Clear? Okay. Yes. B. What is B? Fixed deposit with FD with HDFC Bank. FD with HDFC. 2 lakh rupee. What is the classification? It has to be part of the current asset only. It has to be part of the current asset only, but under current asset, which line item? Under current asset, which line item? Other bank balances. Other bank balances. Other bank balances in the balance sheet under current asset, right? Why? While you, for cash and cash equivalent, you have to see from the date of deposit. You have to see the maturity of 90 days, not 90 days, 3 months from the date of deposit, right? On the balance sheet date, this HDFC Bank FD is going to be matured on 15th June 2026, right, Manoj? Right? So from 31st March 26, when you look at the balance sheet on 31st March 26 on the reporting date, the outstanding period is only 2.5 months, right? So it is current asset, but for the purpose of cash and cash equivalent, you are always required to look at whose original maturity was 3 months or less. Manoj, whose original maturity was 3 months or less. So Manoj, for this FD with HDFC Bank, whether the original maturity was for 3 months, 15th January to 15th June. No, it is for 5 months. Yes, yes or no, Manoj? It is for 5 months, right? It is for 5 months. Okay. Because it is convertible to cash with known amount with penalty. So Manoj, in that case, if you have deposited a fixed deposit for 3 years, will it be a cash and cash equivalent? Everything can be redeemed, na? Everything can be redeemed. Nobody is stopping any business to redeem the deposits. Are you getting me? Manoj, you are showing inventory as a current asset. Is it necessary that you will realize the inventory within operating cycle or within 12 months? Right? No, that is why I'm talking about. I'm talking about a principle. In that case, everything will be cash and cash equivalent. That is why standard has given you a guidance. Standard has told what is your best estimate. These prematurity, these are like ad hoc situation. You tell me, Manoj. if somebody has entered into chartered accountancy course, what is the first thing he has thought about? He will be able to clear in the first attempt? Yes or no? Yes. He will be able to clear in 3 years or whatever 4 year time, whatever it is there, right? But if somebody who has to leave the course in between, was it a pre-planned or was it an emergency or ad hoc situation? It is emergency or ad hoc situation. So what I was explaining earlier, I was explaining that having a premature penalty, having a prematurity of a fixed deposit does not mean significant risk of change in value. Your time period has also preponed ना भाई. अगर आप एक्सपेक्ट कर रहे हो कि 1 साल के बाद आपको 10,000 रुपए का इंटरेस्ट मिलेगा, प्रिंसिपल तो इंटेक ही रहेगा, 10,000 का इंटरेस्ट मिलेगा. आपने 1 महीने में बैंक में गए और आपने बोला मेरी एफडी वापस कर दो, प्लीज रिटर्न माई एफडी. How can bank will give you this 10,000 rupees interest? Of course, bank will charge some premature penalty or bank will give the lower rate of interest. Okay. So of course that will be there. That will be there. So we are talking about a normal scenario, not the ad hoc scenarios. Okay. So what is the principle which is given in the standard? Principle says that cash and cash equivalent are those items, those short-term highly liquid investment, which is convertible into cash within 3 months of original deposit. The original maturity period has to be 3 months. Original maturity. You are not required to see if the remaining maturity is 3 months on the reporting date. No, that is not a cash and cash equivalent. That is a current asset, but it will cover under other bank balances. Right. Now, what about C? What about C? Tell me. So friends, for other bank balances means other than cash and cash equivalent, you have to see the classification on the reporting date, right? On the reporting date. So on the reporting date, on 31st March 26, this FD is the remaining period of the FD is 1 year 15 days, right? So it has to be classified as a non-current asset. Non-current asset. Under non-current asset, it has to be classified as a other financial asset. 3 lakh rupees. Okay. Is that clear, friends? Is that clear? गाइडेंस आपको याद रखनी है. समझ आ गया? इससे तीनों सिनारियो समझ में आ गए? मनोज, इज दैट क्लियर? Manoj, is that clear? Have you understood the guidance, Manoj, which is written in the standard? Right? Sai Kiran, Swarnlata, Samenathan, clear? Okay, great. Friends, clear in mind or clear from mind? Clear in mind. Very good. Now, why type C is non-current, sir? Because Ravinder, on 31st March 26, Ravinder, whether this FD is going to be matured within 12 months or after 12 months? Ravinder, on 31st March 26, after 12 months. So Ravinder, it is current or non-current? This is not a new concept in Ind AS or IFRS. This concept was there in accounting standard also, IGAP also. So anything which is realizable after 12 months will be considered as non-current. Of course, concept of operating cycle is also there. But, sir, what if management want to premature it within 12 months? In that case, Rohan, while FD has been made for, let's say FD is going to be, the current, the original maturity date is 15th April 27, but management wants to premature it, let's say in December 2026, okay? And management is very clear, okay? Then it will be, if it is expected to be realized within 12 months, then you can classify it as a current asset, other bank balances. But the point is how you will demonstrate, right? In that case, being an auditor, you have to take this on letter of representation or management representation letter. Letter of representation or management representation letter. Okay. But in real life, generally it does not happen. In real life, whatever is the original date of maturity, you will go by that. Even if your question says that the management is clear or the management expect, while the original maturity is 15th April 27, but management expect it to redeem on December 2026, then it has to be shown as a current asset, other bank balances. Is that clear? So Saminathan is saying, sir, if our operating cycle is more than 12 months, let's say our operating cycle is 15 months, then what will happen in this case? In this case, if the operating cycle is 15 months, then you have to consider it as a current asset. Because in that case, your current non-current classification go by 15 months. Okay. But my dear friends, if question is silent, 99% cases, it is 12 month or 12 month or less. In practical life also, for current non-current classification, people are taking 12 months period. Okay. In specific industries, in few cases, people go by the operating cycle. Don't get into the operating cycle until and unless question will tell you the operating cycle, right? Otherwise, the basic fundamental is 12 month. Okay. Clear? Manoj is saying, sir, one doubt. I have a statutory FD required by CBUAE and will mature on 15th April and need to renew the FD mandatorily. Will that be a cash and cash equivalent or other bank FD? So Manoj, 15th April. So when you have invested, first of all, let me clarify also. Yes, let me clarify also. A company has invested in the fixed deposit for a company has invested in fixed deposit on 1st January 2026, right? Let's say 1st February 2026 to be matured on 15th April 2026. Manoj, is it for less than 3 months? The original means from the original date of deposit to original maturity. Is it within 3 months, Manoj? In this example which I am taking right now? Yes? Okay. This FD is made against bank guarantee provided to a statutory authority. Suggest the classification of this FD. Suggest the classification of this FD. Tell me the classification of this FD, current or non-current? Tell me the classification of this FD, current or non-current? It has to be current. Of course, it is going to be redeemable within 12 months from the end of the reporting date. It has to be current. Okay. Under current, suggest the classification under current asset, cash and cash equivalent or other bank balances. FDs or let's say restricted FDs issued for a specific purpose, right? Restricted FDs issued for a specific purpose will not be shown as cash and cash equivalent, right? The restricted FDs means for FDs which are issued for bank guarantee, right? So these are not cash and cash equivalent, okay? These are not cash and cash equivalent. These has to be shown under other bank balances. These are shown under the other bank balances. Fixed deposit, okay? These are the guidance given in the standard, okay? Fixed deposit. Fixed deposit, okay? Right? Manoj, whether things are getting clear to you or not getting clear to you? Okay. A third example. Let's take one more example. A company has declared a dividend of 10 crore. As per the requirement of Companies Act, the company has opened a separate bank account with HDFC bank, right, for transfer of dividend to the shareholder, to the shareholders, okay, to the shareholders. As at 31st March 2026, the balance of rupees, the unpaid balance, or the unclaimed balance of rupees 5 lakh is lying in the bank account. So friends, your bank balance will always be a cash and cash equivalent. Your bank, what is your bank? Your bank is cash, right? Your bank balance will also be always be a cash and cash equivalent. Yes or no? भाई आपके जो बैंक में पैसा पड़ा है कैश एंड कैश इक्विवेलेंट होगा ना. सो सजेस्ट द क्लासिफिकेशन. अब बताइए इसकी क्लासिफिकेशन क्या होगी. सजेस्ट द क्लासिफिकेशन ऑफ दिस बैंक बैलेंस. Will it be current? Will it be current? Yes, it will be current. Yes. Current asset, yes. Where? In current asset, where? In cash and cash equivalent, other bank balances, where? Where it has to be shown? Cash and cash equivalent or other bank balances? Very good, Rohan. It is a restricted. It is a restricted balance. It is not a cash and cash equivalent. Very good, Saminathan. Yes. So unclaimed dividend account balance, unclaimed dividend bank balance, right? So this is for a specific purpose, Manoj. This cannot be used for the general purposes, right? The company cannot withdraw funds for the purpose of paying a salary from this bank account. No. So this has to be shown as a other bank balances, not a cash and cash equivalent, right? Not a cash and cash equivalent, right, friends? Okay. Friends, I hope this classification of FD, this bank balance, you guys have understood the meaning of cash and cash equivalent, right? This bank overdraft treatment, you guys have understood the meaning of bank and bank balance. I hope this is clear to all of you, right? Another example. So many examples, sir. A Limited has a cash and cash equivalent of rupees 5 lakh and bank overdraft of rupees 7 lakhs and bank overdraft of rupees 7 lakhs. Suggest the presentation or classification in balance sheet and cash flow. Solution. Balance sheet classification. Okay. Balance sheet classification. Cash and cash equivalent 5 lakh rupee, right? Then your current liability. Short-term borrowings 7 lakh rupee. 7 lakh rupee, right? Now, cash flow presentation. Cash and cash equivalent, right? What is my cash and cash equivalent? 5 minus 7. Negative 2 lakh rupee. Okay. Now, notes to cash flow statement. Notes to the cash flow statement. Cash and cash equivalent as per statement of cash flows. As per statement of cash flows. Add bank overdraft. Cash and cash equivalent as per balance sheet. Whether the reconciliation help? Yes. Whether the reconciliation help, Manoj? Whether this reconciliation helps? Yes. Okay. So, Manoj, security deposits, these kind of items will not be considered as a cash and cash equivalent, right? These are the operational items. These are not considered as a cash and cash equivalent. Yes, this reconciliation has to be given in the footnote to the statement of cash flows. Okay. So few, see, few companies, what they are doing, they are also giving this disclosure in the general notes to accounts, where they are giving the disclosure in the in where they are giving the disclosure or breakup of the cash and cash equivalent. There they are giving this reconciliation also, but many companies are giving the reconciliation as a footnote to the cash flow statement or statement of cash flows, right? So both are allowed, but if you ask me, the better presentation is the footnote to the statement of cash flows, right? Okay, so guys, can we move fast now? Can we move fast? We did lot of questions. Yes. Yeah. Quickly tell me. Fixed deposit with State Bank of India, 12% 3-year maturity on 1st January 2004. On 31st March 2001, you have to give me the classification. FD with SBI, 12% interest rate, 3-year maturity on 1st January 2004. Is it current, non-current? Of course, non-current. 31st March 2001, you have to give the classification. It is going to be matured on 1st January 2004. It is non-current, right? Non-current other financial asset. Fixed deposit with HDFC, 10%. Original term was 2 years, but due for maturity on 30th June 2001. So the original term was for 2 years, but it is due for the maturity on 30th June 2001. Current, non-current. Cash and cash equivalent, other bank balance, or non-current asset? It is other bank balance. You are absolutely right. It is current asset because on 31st March 1, it is going to be redeemed on 30th June 2001. So within 12 months, but the original maturity was not 3 months, right? Right, Manoj? Yes. So it is other bank balances coming under the current asset. Redeemable preference share in the ABC Limited, redeemable preference share, which carries interest, which is principal, acquired on 31st January 2001, due for 30th April 2001. Short term, highly liquid, original maturity is 3 months, right? Third, tell me, current, non-current. Current, cash and cash equivalent or other bank balance? Is it cash and cash equivalent or not? Yes, it is cash and cash equivalent. Yes. Okay. Cash balances at various branches. Cash balance at various banks. All branches of bank in India. Whether it is cash and cash equivalent, answer is yes. Cash balance at various bank, international branches of Indian Bank. Tell me point number 5. Is it a cash and cash equivalent or not? You have a cash balance at various bank in the international branches. All international branches of Indian banks. Yes, it is a cash and cash equivalent. Cash balance at various bank branches of foreign banks outside India. You have a money lying in your Citibank account in America, in USA. Whether it is a cash and cash equivalent? Yes or no? Manoj, is it a cash and cash equivalent? Yes, it is a cash and cash equivalent. Bank overdraft of SBI Fort branch, which is payable on demand. SBI Fort branch bank overdraft. Yes, it is part of cash and cash equivalent for the purpose of cash flow statement. Treasury bills. Treasury bills. 90 days maturity. Original maturity is 90 days. Yes, it is a cash and cash equivalent. Okay. So fixed deposit SBI not to be considered long term. HDFC exclude as original maturity is not less than 90 days from the date of acquisition. Okay, right? Include as due within 90 days from the date of acquisition. Okay, this is what we have already discussed. Now, friends, three activity we are aware: operating activity, investing activity, financing activity. Operating activity is a principal revenue producing activity of the entity, and other activity that are not investing or financing activity. So as I told you, operating activity means activity which comes from the operations, Principal revenue producing activity of the entity, right? What is investing activity? Investing activity is an activity which is largely related to acquisition and disposal of long-term assets. So first, in operating activity, what will be covered? Your revenue, your expenses, right? Your all the kind of, all the operational expenses, salary, rent, everything is part of operating activity. Revenue from operation, part of activity, operating activity. Taxes paid, part of operating activity, right? So investing activity, acquisition and disposal of long-term assets and other investment not included in cash and cash equivalent, right? So if you have deposited in fixed deposit of a bank for 2 years, whether this fixed deposit will part of cash and cash equivalent or this fixed deposit will part of investing activity, बताइए. Whether this fixed deposit will part of cash and cash equivalent or this fixed deposit will part of investing activity. This fixed deposit will part of investing activity, right? It is not a part of cash and cash equivalent. A company has deposited money for 3 months. A company has deposited money for 3 months in HDFC Bank fixed deposit. Whether it is part of cash and cash equivalent or it is part of investing activity. This investment in fixed deposit for 3 months, is it part of cash and cash equivalent or investing activity? It is part of cash and cash equivalent. It is part of cash and cash equivalent. It will not form part of investing activity. This is what it is saying. Acquisition and disposal of long-term asset and other investment not included in cash and cash equivalent, right? Acquisition and disposal of long-term assets means purchase of PPE, intangible asset, purchase of biological asset, purchase of investment property, sale of PPE, sale of investment property, sale of biological assets, sale of investment property, intangible assets. Okay. So investment in shares, mutual funds, investment in equity shares of listed company, unlisted company, all these are part of investing activity. Interest received from loan given. Is it part of investing activity or financing activity? You have given a loan. Is it an asset or liability? You have given a loan. The company has given a loan. It is an asset. It is part of interest received, is part of investing activity. Loan given is part of investing activity. But the company has taken a loan. Loan taken. The company has received the funds due to taking a loan. So cash movement, cash flow from taking a loan, is it a part of investing activity or financing activity? Friends, I'll not move if everybody will not answer. It is part of financing activity. You are absolutely right. It is part of financing activity. Okay. Right. So investing activity means largely related to your assets. Okay. Assets. But when it is comes to a liability, means loan taken, interest paid, dividend paid, equity share is also liability, means it comes from the liability, it comes to the liability side, equity. Okay. So equity raised. So these are the financing activity. Activity that result in the changes in the size and composition of the contributed equity and borrowing means capital structure. It deals with the capital structure. It deals with the operations, as the name suggests. It deals with the long-term assets, long-term investments, long-term investment, be it investments in the PPE, intangible asset also. It deals with the capital structure. Capital structure. Please write in the notes. Okay. Operating activity deals with the operation, investing activity deal with the long-term investment, financing activity deals with the capital structure. Okay. Clear? We discussed about the operating activity, friends. Now, let me show you a specimen. Let me show you a specimen cash flow statement. So that I will show you after this discussion. So let's discuss which is the operating cash flow. Which is the operating cash flow? From the following transaction, and these questions are from these case studies are from Board of Studies study material. From the following transaction, identify which transaction will be qualified for the calculation of operating cash flows. If company is into the business of trading of mobile phones, what is the business of the company? Trading of mobile phones. Okay. Receipt from sale of mobile phone. Is it a operating activity or not? Is it a operating cash flow or not? Yes, it is a operating cash flow. Yes. Purchase of mobile phone from various companies. This company is in the trading of mobile phone. So receipt from sale, revenue from operation, purchase is made. Okay. So second, whether it is an operating activity or not. Second is also operating activity, right? Inventory purchased. Okay. Employee expenses paid. Is it relating to the operating cash flow or not? Yes. Advertisement expenses paid. Advertisement expenses paid. Yes, it is also operating, right? Credit sale of mobile. Credit sales of mobile. Is it operating, investing, financing? Credit sale of mobile. It is non-cash. Credit sale of mobile. So while you will adjust it by the changes in the working capital, credit sale is a non-cash now. What is credit sale? Credit sale do not include. Credit transaction will not be included in the cash flow, right? Receipt from customer will include. So it is operating in nature. It is operating in nature, but whether it is a cash flow, it is asking for the calculation of operating cash flow. It is non-cash. It is not a cash flow. Not a cash flow. But is it a operating item? Yes, it is a operating item. Yes. Okay, but not a cash flow. Manoj, सही है ना? It is not a cash flow na. If the company has made a credit sale, the company will not receive any money. I have told you na in my example of 20,000 crore of revenue. Miscellaneous charges received from customer for repair of mobiles. Miscellaneous charges received from customers for repair of mobile. Yes, it is also relating to the operating. Yes. Loss due to decrease in market value of the closing stock of old mobile phones. The company has an inventory of the old mobile phones and there is an impairment loss because market value has gone down. It's a non-cash item. It's a non-cash item. It's an impairment due to decrease in market value. It's a non-cash item. Okay. It's a non-cash item. Right? Payment to suppliers of mobile phones. It's an operating item. Yes. Operating cash flow. Depreciation on furniture of sales showrooms. Depreciation on furniture. Is it a operating, investing, financing? It's a non-cash item. It is not part of your cash flows anymore. But let's say if it had been purchase of furniture, then purchase of fixed asset, purchase of PP&E is a investing activity. Okay. But it is a non-cash item. It will not come under investing activity also. Okay. Interest paid on cash credit facility of the bank. Interest paid on the borrowing. Interest paid on the borrowing. It's a financing activity. It is not a operating activity. It's a financing activity. Interest paid on cash credit facility do not include it as a cost of finance. It's a financing activity. Okay. Profit on sale of old computer and printer. Profit on sale of old computer and printer in exchange of new laptop and printer. The company has sold old computer and printer and the company has received new laptop and printer. So the old computer and printer worth 10,000 rupees. The new laptop and printer they have exchanged it is worth 15,000 rupees. Right. So is it a operating cash flow, investing cash flow or financing cash flow? It's a non-cash item. Yes, it's a barter, it's an exchange. 11 number. It's a barter, it's an exchange. Do not include, it's a non-cash item, right? 12, advance receipt from customer. Advance receipt from customer is operational, right? It is relating from to the customer operating activity. It is operating activity. Sales tax and excise duty paid. Operating, investing, financing. Operating activity, okay? So these are the operating cash flows. Have you understood operating cash flows, non-cash item, investing activity, financing activity? Have you understood it or not? Sir, if there is no clarity, for example, We understood operating activities are activity relating to the operating item. So it is also a residual category. If any item which is not fitted into the investing activity or financing activity, it will also get into the operating activity, right? While standard does not say that, but it is just like that as a practice only. Okay. Okay. But you will be able to classify what is a operating, what is a financing, what is a investing. Okay. Clear? Is that clear or not clear? So we will cover the investing item and financing item also. Then I will show you the specimen cash flow statement. Okay. Then we will take it forward. Okay, friends, it's 8:32 now. Let's have a break and we will start at 8:45. Is that clear? 8:45. It's 8:33 now. Yes, friends, under operating activities, there are two methods, direct method, indirect method. Okay. So what is a direct method? In direct method, so while, you know, this cash flow statement, as I told you, this statement of cash flows, or I would say cash flow statement, whatever it may be. So in this case, what happens? All other component have been prepared as per the accrual basis, right? And this statement of cash flow is prepared on a cash basis. So technically speaking, you are taking the numbers from balance sheet and P&L. Okay. So when you are taking a numbers like profit from balance, profit from P&L, so you'll start with the profit from the P&L and then you do some adjustment and then you reach at the cash flow from operations, cash flow from operating activity. So this is known as an indirect method. But my dear friends, in direct method, what happens? In direct method, what happens? In direct method, so basically, direct method is just like a cash account. When I say it is just like a cash account, it means whatever money has been collected from the customers, okay, whatever amount has been paid to the employees, vendors, suppliers, whatever income taxes paid, so that will be shown as a cash flow from operating activity, right? So directly, it is just like a cash account. Okay. So let me take you to on the Excel file. And if you see, I hope you're able to see this cash flow statement, direct method, indirect method. I hope you're able to see this. Are you able to see this? Direct method, indirect method? Yes. So in the first part, this is an example of, the entire sale is on the credit basis for more than 15 months. So let me write as a 15 months. Okay. And let me give the same example, 20,000 crores and how much? 10,000 crores. Okay. Taxes are 30%. Yes. And this profit is on accrual basis. Okay. In the closing, the debtors are zero. Okay. So in the closing, the debtors are 20,000, opening zero debtors because the entire sales is on a credit basis, right? So talking about direct indirect method. So direct method is just like a cash account. So how you will present the cash flow from operating activity in direct method? In indirect method, cash collected from customer, cash paid for expenses or purchases, right? Cash paid for expenses or purchases. Okay. Cash collected from customer. According to this example, whether any cash collected from customer will come? No. This entire 20,000 crore sales was on credit basis, na? You remember the example we discussed in the beginning? Yes? Guys, I hope you are able to understand what I'm trying to say. Okay. So cash collected from customer is zero, but cash paid for expenses and purchases 10,000 crores. Income taxes you have also paid for 3,000 crores. So what is your cash flow from operating activity? Net cash flow from operating activity is 13,000 crore negative. This is direct method. What is indirect method? In indirect method, you always start with profit before tax. What is your profit before tax, my dear friends? What is your profit before tax? Your profit before tax was how much? 10,000 crores? Yes. Add or less non-cash item. Whatever non-cash item is there, you have to add or less. Okay? Non-cash item, whatever non-cash item is there, you have to add or less that non-cash item. Okay. Since in this example, it is not there. You have to add or less non-operating item. Yes, Ravinder, like depreciation, foreign exchange fluctuation, right? Forex differences. So these you are required to add back. Add or less non-cash item, add or less non-operating item. What could be the non-operating item? For example, in your P&L, interest received is there, interest paid is there, interest received, interest received on fixed deposits. Whether it will be part of your P&L or not? Yes, it will be part of your P&L. Yes, but is it an operating activity? Interest received is an investing activity. Interest received is an investing activity. Interest received is an investing activity, right? It is, but it is part of your P&L. And you started preparing your cash flow statement with what? With profit before tax. It is sitting in your profit. If it is sitting in your profit, what you will do? If it is sitting in your profit, what you will do? You will adjust it, na? You will adjust it, right? So what I have done, add or less non-operating item. So this will give you operating profit before changes in working capital. Friends, I am telling you the specimen of I am giving you the structure of cash flow from operating activity, right? Which you are already aware because you guys have seen or prepared or audited statement of cash flow, even in accounting standard. Now, friends, so my operating profit before changes in working capital is 10,000 crore. Now I have to do the adjustment of working capital. I have to do the adjustment of working capital to reach at the cash flow from operations. Increase in current assets, right? Now, operating profit before changes in working capital, I have to do the adjustment of working capital, increase in current asset, decrease in current asset, increase in current liability, decrease in current liability. I have to do the adjustment for that. Okay. Increase in current asset, decrease in current asset, increase in current liability, decrease in current liability. So I have to do the adjustment for that. Friends, in this case, my debtor has been increased from last year. From opening, in the opening it was 0. In the closing it is 20,000 crores. Friends, what is the adjustment of this debtor? Please tell me. इस debtor की क्या adjustment होगी? Whether I will add or I will less. Friends, if this debtor has gone up, what does it mean? It means I have made a credit sale. It means I have received less money. Yes or no? इसका क्या मतलब है? इसका मतलब तो यही है ना कि I have to deduct it because I have not received funds in the business. If debtor balance has gone down, then what does it mean? If the debtor balance has gone down, it means you have received the money. It means you have to add back because your profit is coming. This portion is coming from the accrual concept, right? So now you have to reach at the cash. So how will you reach at the cash? You have to do the adjustment. So increase in current asset, which is debtor, it has to be deducted. It has to be deducted. Opening minus closing. Opening minus closing. Minus 20,000 crores, right? Now, this plus this gives me a cash flow from operations. This plus this will give me the cash flow from operations. Now, taxes paid. How much taxes I have paid? 3,000 crore, right? So what is my net cash flow from operating activity? My net cash flow from operating activity is how much? So how much is my net cash flow from operating activity, friends? My net cash flow from operating activity is 13,000 crores. Friends, tell me whether you prepare the operating activity cash flow by direct method or by indirect method, whether it has to be same or not. Whether the net cash flow from operating activity has to be same or not, it has to be same. You can see it was 13,000 crore as per the direct method also. It is 13,000 crore as per the indirect method also. You can see that, right? It is 13,000 crore only. 13,000 crore as per the direct method, 13,000 crore as per the indirect method. Okay. Clear? Is that clear or not clear? Please tell me. Is it clear? Not clear? Yes. I'll discuss more about this. So various activity, operating activity, investing activity, financing activity we discussed. Operating activity means activity relating to the principal revenue producing activity, main operations. Investing activity means acquisition and disposal of long-term asset and investment other than cash and cash equivalent. Financing activity are activity relating to the capital structure of the entity. Friends, cash flow statement is required to be prepared on a cash basis, right? I have written all these things which I have explained you. Method of preparation of cash flow statement, my dear friends. In operating activity, you can use either direct method or indirect method. Both are allowed. But in investing and financing activity, only direct method is there. In investing and financing activity, direct method is there. What is meant by direct method? Means actual cash flow, actual flow of cash, actual flow of cash. Direct method means actual flow of cash. This is the meaning of direct method. Means actual cash received, actual cash paid, right? So your investing activity and financing activity is on the actual cash flow. Your investment has been measured at fair value and it has gone up by 500 crores. Will anything come under the financing activity? Sorry, my bad, investing activity. You have made an investment. Investment value has gone up by 500 crores from opening to closing. There is no purchases, no sales. It is just because the market value has increased. Will you take anything in the investing activity? Your investment has increased. No effect, non-cash item. But whether this 500 crore will go to P&L? Yes. Investment account debit to mark to market gain on unrealized gain on the investment? Yes. It will go to the P&L. So, but it is a non-cash item. So you will start your cash flow with the profit before tax, right? Will you adjust this unrealized gain on the investment? Yes, add or less non-cash item, right? You will add or less non-cash item. Assuming this 10,000 crore is profit, and in this profit there is a 500 crore of unrealized mark-to-market gain. So what is the adjustment of that unrealized mark-to-market gain? Whether it has to be added or deducted. Your profit is increased due to this mark to market gain. Your profit is increased due to mark to market gain. So now you have to reduce your profit to arrive at a cash profit. You have to reduce, you have to deduct. Okay. Right. My dear friends. So this direct indirect is only for the operating activity because it is starting from profit. But investing and financing are actual cash received, actual cash paid. Now tell me, standard allows both. But listed companies only follow indirect method of cash flow. Why? Why listed companies are only following indirect method of preparation of statement of cash flows? Why? What is the reason behind it? You are absolutely right, Rohan, and I am amazed to see the response. You are absolutely right. Listed companies are only allowed to use indirect method of operating activities for preparation of cash flow as per SEBI LODR regulation. SEBI regulation. So who is the mother body? Who is the mother authority of listed company? In addition to Companies Act, it is SEBI LODR regulation also. SEBI regulations also. Okay. So as per SEBI regulations, so that your cash flow should be sync with your balance sheet and P&L, the SEBI regulation only allows you indirect method of cash flow. Cash equivalent we discussed. Cash equivalent is equal to short-term highly liquid investment plus 3 months, which is 3 months plus known amount of cash plus no significant risk of change in value. Right? Treatment of bank overdraft, friends, we discussed. Okay. Right? Reconciliation of cash and cash equivalent. This is how it will happen. We will discuss. Okay. So now, my dear friends, we are moving to the further aspect of this, and so direct method, I'm just leaving. Let's discuss investing activity. What is investing activity? We understand investing activity means your purchases of PP, intangible asset, biological asset, investment property, sale of PP, biological asset, investment property, interest received, investment made, in sale of investment, all these items, loan given, all these items comes under investing activity. Okay. Now let's discuss what is considered as an investing cash flow, right? So this is what it is given. So you have to tell me which is cash and cash equivalent, which is operating activity cash flow, and which is investing activity cash flow. From the following transaction taken from a private sector bank operating in India. Guys, this cash flow is for whom? Is it for a banking company or a non-banking company? It is for a banking company. From the following transaction taken from a private sector bank, very, very important, private sector bank. Identify which transaction will be classified as operating and which would be classified as investing activity. Interest received on loans. Interest received, operating activity or investing activity? You have to apply your mind. Before answering, you have to apply your mind. You guys are telling me in operating activity. Why you are saying me operating activity? Why? Why? Operating activities are activities which is relating to the revenue producing activity. Loan given, loan taken. So these are the principal activity of the bank. These are the main operations of the bank. Very good. Ravinder, Saminathan, Manoj, right? It is a bank. You are absolutely right. It is a bank. Okay. So interest received on loans, since it will be a main revenue generating activity, it will be classified as operating activity. It will be classified as OA, operating activity. But if it would not have been the bank, if it would have been the general company, general business, then interest received is investing activity. Since it is a bank, it is a operating activity. Interest paid on deposits. Interest paid on deposits, again operating activity, right? You have deposited into the bank. This is a liability for the bank, and This is interest paid. This is the bread and butter of the bank, right? So this is again an operating activity. But tell me, if a company has taken deposits, from the various market participants and company is paying interest on them, then it is a financing activity, right? Financing activity. Deposits accepted. Deposits accepted. Operating or investing or financing. So operating or financing, not investing. Acceptance of deposit is a liability, right? It's a operating activity. Operating activity. Loan given to customer. Loan given. Loan given is an investing activity, but it is a bank. What will happen? Operating activity. Loan repaid by the customer. If loan given is an operating activity, loan repaid by the customer will also be operating activity. Deposits repaid. If deposit accepted is an operating activity, deposit repaid is also an operating activity. Commission received. Commission received. Locker charges, commission received. Operating activity. Forex commission received. Operating activity. Lease rental paid for various branches. Lease rental paid for various branches. Operating activity. Tell me, if this would not have been the bank, so Manoj, which item you are calling it as a financing activity? No, any item is a financing activity so far. Okay. So yes, lease rental paid for various branches. If you will apply Ind AS 116, right? If you will apply Ind AS 116, then instead of showing a lease rental, you will show interest and depreciation. So that finance cost, interest cost will go to financing activity. But assuming this lease rental is a short-term lease rental which is charged to the P&L. Okay. This lease rental is a short-term lease rental which is charged to the P&L. So in this case, my dear friends, in this case, if it is a bank, right? Or let's say if it is not a bank, it would be any general company, any general business. Then what will be the classification of this lease rental paid for various branches? Assuming this lease rental is charged to P&L. For everyone, why they are paying rental? They are paying rental for running their business operations. It will be your operating activity, right? But yes, as rightly said by Manoj, if you apply Ind AS 116, then it will result into the depreciation and interest cost. That interest cost will go to the financing activity, right? But as of now, we are assuming this lease rentals are debited to the P&L and it will be part of the operating activity, not only for the bank, but for everyone. Service tax paid. Service tax paid, is it an operating activity or some other activity? Service tax paid, GST paid, it is operating for everyone. Operating activity. Furniture purchased for new branches. Furniture purchased for new branches. Is it an operating activity or investing activity? Yes, even for the bank or everyone, it is an investing activity, long-term assets of the company. Implementation of upgraded banking software. They have upgraded their intangible assets. What is that? Is it operating, investing, financing? It is investing activity. Purchase of shares in 100% subsidiary for opening a branch in Abu Dhabi. They have made an investment in a subsidiary for opening their bank branch. Again, it is an investing activity, right? Kanhaiya Singh, it is not a financing activity. They have purchased. They have invested Kanhaiya. They have not taken money. They have not taken a loan. Kanhaiya, so whenever you talk about financing, na, so it means you are talking about paying. Okay. Capital structure क्या होता है? Equity or debt related. New car purchased from Honda dealer in exchange of old car and remaining amount paid in cash. And remaining amount paid in cash. What will be this? This item will be investing activity to the extent cash is paid. To the extent it is exchange barter, it is non-cash item. It is non-cash item, right? It is non-cash item to the extent it is barter. Okay. So new car purchase, investing for only for the cash payment part. Sorry. Provident fund paid for employees. PF paid. Cash, non-cash. PF paid. Is it cash or is it non-cash? Is it cash or is it non-cash? So provident fund paid for the employees, cash, operating or investing. You are paying for employees. It is your cost, operating activity. Issued employee stock option. You have issued ESOP. At the time of issuance of ESOP, no cash flow is there. It is a non-cash item. Non-cash item. Okay. It is a non-cash item. It is a non-cash item. I hope it is okay. Is it clear? Yes. Financing activity, the activities which is relating to the capital structure of the company. For example, cash proceeds from issuing shares, cash payment to owners to acquire or redeem the entity's shares, cash proceeds from debenture, loan, notes, bonds, mortgage, long-term borrowings, etc. Cash repayment of the amount borrowed, payment by a lessee for reduction of the outstanding liability relating to leases. So payment of lease liability. This part came after introduction of Ind AS 116. Friends, whatever I have covered so far, are you able to understand or not? Please tell me. I think I'm not rushing. Yes. I'm going very slow. Yes. I have given a lot of example. Okay. So I hope you guys are able to understand it very well conceptually as well as so that it is helpful for your real life also, right? Conceptually and technically you are able to understand, right? Great, great. Friends, now so far we did a case study on cash and cash equivalent, then operating activity, then operating and investing activity. Now you have to check whether it is an operating activity, investing activity, and financing activity. So we go step by step. First, we discuss a case study on cash flows, cash and cash equivalent, then operating activity, then investing activity where you checked operating, investing both. Now we have to We have to check all three parts: operating, investing, financing. From the following transaction taken from a parent company having multiple business in multiple segments. Having multiple business in multiple segments, not a bank, normal company. Identify which transaction will be classified as operating, investing, and financing. Okay. Number one, issued preference shares. Issuing a preference shares, is it an operating activity? No. Issuing preference share means you are taking a liability, you are taking money, not giving money, taking money. So whether it is operating, investing, or financing, it is a financing activity. It is a financing activity, right? Very good. You absolutely, everybody has given a right answer. Financing activity. Okay. It is a financing activity. Purchase the shares of 100% subsidiary company. You have invested in a subsidiary. You have invested in a subsidiary. What will be there? You have invested in a subsidiary. Yes, Saminathan. You have invested in a subsidiary, investing activity. It is an investing activity. You have invested in a subsidiary. Dividend received. Dividend received from shares of subsidiaries. Dividend received. Investing activity. Very good. Dividend received from other companies. This is from subsidiary, now from other companies. Doesn't matter whether you invested in your own company or invested outside. Investing activity. Bonus share issued. Bonus share issued. Bonus share issued. Non-cash. When you are issuing your bonus shares, your number of shares will go up, but your share capital will remain intact. No change. It is a non-cash item. It is a non-cash item. Okay. Purchase. Ravinder is saying just making fool of shareholders. Okay. Purchased license for manufacturing of special drugs. Purchased license for manufacturing of special drugs. Purchase license, intangible asset purchased. Investing activity. Okay. Royalty receipt from the goods patented by the company. The company has patented some goods and the company has received a royalty. Right? Royalty received from the goods patented by the company. Operating activity. Right? Rent received from the let out building. Letting out is not the main business. So the company has investment property, and from the investment property, the company is receiving a rent. Investing activity, very good. This is if it would have been the main operation, then it is a operating activity. If it would have been the main operations, okay. But here it is not a main operation. Interest received from loans and advances given, not taken, given. Operating, investing, financing, OIF, investing activity. Yes. Dividend paid. Dividend paid, investing, financing. Dividend paid, investing or financing. You have paid a dividend to the shareholders to whom you have raised the money. So financing activity. If it would have been the bank, then dividend paid. You are absolutely right, Manoj. It will still be the same. So even for the banker, this is an equity share capital, right? So this is a capital structure. It is a equity share capital. Dividend paid to shareholder will always be a financing activity. It doesn't matter it is bank, non-bank. It will always be a financing activity. Okay. Yes. Interest paid on security deposit. Interest paid on security deposits. Operating, investing, or financing. You have received the security deposit and you are paying the interest. So paying the interest on security deposit will be financing activity. Paying the interest on the security, whatever interest you paid, it means you have taken the funds to deploy in your business, and that is why you are paying interest on that, right? Paying an interest on the security deposit is your financing activity. Okay. Purchased goodwill. Purchased goodwill. Purchased goodwill is what? Is it a operating activity, investing activity, or financing activity? Is it a operating activity, investing activity, or financing activity? Purchased goodwill, intangible asset purchased. It is a investing activity. Acquired the asset of a company by issue of equity share, not parting any cash. The company has acquired the asset. In barter, the company has issued the shares. The company has not paid any money. The company has issued the shares. The company has issued the shares. The company has not paid any money. Is it a operating, investing, financing? Had the company paid the money, it is a investing activity, but here it is a non-cash item. Interim dividends paid. Interim dividend paid. Doesn't matter it is interim dividend or final dividend, it is a dividend and it is a financing activity. Dissolve the 100% subsidiary. Dissolve the 100% subsidiary and receive the amount in final settlement. What is this? Of course, investing activity. It is an investing activity, right? It is an investing activity. Friends, in this case, have you understood after doing these 4 case studies? Have you understood operating activity, investing activity, financing activity in case of a bank and NBFC, other than bank and NBFC, right? Cash and cash equivalent, bank overdraft. Have you understood the meaning of short-term highly liquid investment? Have you understood the meaning of known amount of cash, having no significant risk of change in value? Have you understood the reconciliation of cash and cash equivalent from cash flow to balance sheet? Have you understood direct method, indirect method? Have you understood that indirect method is prepared from the accrual to cash in case of operating activity, but direct method is a cash account, just like a cash account. Whatever cash you collect, whatever cash you paid, right? That is the direct method. Okay. As per SEBI LODR regulation, only indirect method is allowed. In investing and financing activity, there is only one method, which is direct method. Okay. 11 number is interest paid on security deposit, Saminathan. So So basically, Saminathan, normally what happen, companies are taking interest-free security deposits. Okay. For example, the company has given a premises on a rental basis. But what happened? The security deposit which you are paying and the company is receiving, right? So they are interest-free. But tell me, why company is ready to pay the interest on security deposit? So in a way, the company is taking a funding from some other party. Okay. And the company is paying an interest, and company is using the money for the purpose of working capital management. So that is why it will be considered as a financing activity. So any interest paid will be considered as a financing activity. Point number 7, royalty received from the goods patented by the company. So company is selling goods. Okay. And the company has patented some goods that I am authorized to sell these kind of goods. Okay. But company has authorized somebody and he is giving the royalty to the company, right? So this is in connection with the main revenue of the company. Okay. So that is why it is your operating activity. Correct. So now, my dear friends, classification of interest and dividend, we have already seen So interest received is a investing activity for other entities. But if it is a bank or NBFC, then it is a operating activity. Interest paid. Interest paid is a financing activity. Interest paid is a financing activity. Okay. But if it is a bank or financial institution, it is an operating activity. Dividend received is an investing activity for other entities. But if it is a bank or financial institution, they used to lot of investment in the mutual funds or the other shares, right? It is an operating activity. Dividend paid. Dividend paid is a financing activity for everyone. Abhijit, royalty is not an investment. Okay. Why you get the royalty? Because you have got some things patented. Okay. It is never you will not say royalty is an investment, right? So whatever intangible asset you have created, like formula, that is an investment. That is an intangible asset. If you are earning money on that, it is like a operating activity, right? It is like a operating activity. An author, what is the main business of the author? Writing books. There is a educator who is an author, who is a teacher, who is a faculty, who is a speaker, right? He is also writing the books. From writing the books, he is getting a royalty. What is that? That is a business from, that is a cash flow from operations. Okay. Yes. Clear? Not clear? Clear? Not clear? Okay, now let's discuss some more questions, because the more question you will solve, you will get higher level of confidence. You all know the statement of cash flow, operating activity, investing activity, financing activity. What is these activity we have discussed at length. Then the total of these three activity will result into net cash, net changes in cash and cash equivalent. When you add this net cash changes in cash and cash equivalent in the opening cash and cash equivalent, it will give you the closing cash and cash equivalent. Right, my dear friends. And we understood how I'll start my cash flow from operating activity, profit before tax. Then I will adjust my non-cash item. Then I will adjust my non-operating item. It will give me the cash flow changes before cash flow before changes in working capital. Then I will adjust my increase or decrease in current assets and current liability. It will give me cash flow from operation. Then I will deduct my income taxes paid. Then it will give me the cash flow from operating activities, right? We all know this because we are chartered accountants. Now, let's discuss this. Grant receipt from government. So grant receipt from government, friends. Grant receipt from government is part of other operating income. Okay. If government is giving you a grant, which is of course non-refundable, let's say, and you have taken a grant, so whether it will be a financing activity, whether government grant is impacting your capital structure, means, are you getting a funding from the government grant? Tell me, are you getting a funding from the government grant? No, you are not getting a funding from the government grant. You are not getting a funding from the government grant, right? Right? Clear? Clear? Yes. So is it an investing activity? Have you given something to someone else? No, right? So basically, where it will come? It is not an investing activity, not a financing activity. What is the residual category? The residual category is what? Operating activity. The residual category is operating activity. Operating activity. Right? Clear, Mehul? Mehul, is that clear to you? Is it clear to you or clear to you? Mehul, can I have a response, please? Okay, let's move on. Let's move on. Yes, a firm invest in a 5-year bond. Very, very good question. Very good question. Okay. A firm invests in a 5-year bond of another company with a face value of 10 lakh rupee by paying 5 lakh rupee. The effective rate is 15%. The firm recognizes proportionate interest income in its income statement throughout the period of the bond. So a firm invests in a 5-year bond of another company. What is the face value? 10 lakh rupee. It means at the time of maturity, this is an investment in the bond. Okay. This is investment, means company is paying, not company is receiving. Company is paying, investing. A company is investing in a 5-year bond of another company with a face value of 10 lakh by paying rupees 5 lakh. What is the initial cash flow? What is the initial cash flow? 5 lakh rupee. And how much the company will receive after 5 years? 10 lakh rupee. Means invested 5 lakh rupee will receive 10 lakh rupee. Okay. Effective interest rate is 15%. So, in Ind AS, the concept is effective interest rate method. It is not a proportionate interest rate method, effective interest rate method. The firm recognizes proportionate interest income in its income statement throughout the period of bond. Based on how the above information, answer the following question. How the interest income will be treated in cash flow statement during the period of the bond? How this interest income will be treated in the cash flow statement during the 5-year period, during the period of the bond? Tell me. Is there any adjustment of interest income? Is there any treatment of this interest income? Yeah. Friends, what accounting entry company has passed? What accounting entry company has passed in the question? So don't go beyond the question. Question is God. One thing I want to tell you, right? Don't write that you cannot recognize proportionate income. You cannot apply proportionate method. You have to apply AIR method. I told you earlier also, don't go beyond question. Okay. Don't question the question. Answer the question. So friends, in the first year, so company has invested 10 lakh rupee, sorry, 5 lakh rupee. Company will get 10 lakh rupee. So every year company has debited bond investment account debit to interest income, credit, right? This is the entry every year company will pass, bond account debit to interest income account. So now this interest income, the company will receive the interest after 5 years at the time of maturity. This 5 lakh will become 10 lakh rupee. So whether company will receive interest at the end of the first year, second year, third year, and the fourth year, answer is no. So it's a non-cash item. So there is nothing which comes in the interest received, nothing will come into the investing activity. But this interest income, by whatever amount credited, whether this interest income will be added into the cash flow from operating activity in the profit before tax, not added, I mean to say adjusted. So in the profit before tax, what happens with this interest income? This interest income is a non-cash item, non-operating item. So it has to be deducted. Yes. आपका ऑपरेटिंग एक्टिविटी की कैलकुलेशन में लेना पड़ेगा ना इसको. प्रॉफिट बिफोर टैक्स लेस non-cash and non-operating item, interest income has to be deducted in the profit before tax, correct? So in this case, interest income will be treated as income over the period of the bond in the income statement. However, there will be no cash flow in these years because no cash has been received. Second, on maturity, whether the receipt of 10 lakhs should be split between interest income and the receipt from investing activity. On maturity, receipt of 10 lakh will be classified as an investment activity with a bifurcation of interest income and the redemption of bond, right? Redemption of bond 5 lakh, interest income 5 lakh, but both item will come under the investing activity, right? Clear? Any doubt? Any problem? Any gila shikwa? No? Is that clear or clear? दोस्तों क्लियर हुआ या क्लियर हुआ? Is it clear or clear? Clear? Okay, very good. Very good. Yes, perfect, perfect, perfect. Foreign currency transactions. My dear friend, now some special points. Foreign currency transaction. The effect of the changes in exchange rate in cash and cash equivalent held in foreign currency should be reported as a separate part of the reconciliation of cash and cash equivalent. Right. So, my dear friends, if you have a cash and cash equivalent in the foreign currency, then it is subject to a forex movement. It is subject to forex fluctuation, right? For example, you are an Indian entity. Okay, you are an Indian entity. So let me take you on the Excel file. You are an Indian entity, and I am talking about the cash flow, forex cash flows. I am talking about the forex cash flows, right? I hope Excel is visible to all of you. Is it visible? Excel is visible to all of you? Great. So Forex cash flows. Okay. A Limited has the A Limited has USD 10,000 in the foreign bank account. Right? Bank account. The exchange rate in the foreign bank account as at 31st March 2025 as well as 31st March 2026. The exchange rate as on 31st March 2025 and 31st March 2026 is 85 and 95 respectively. The company is preparing the financial statement in INR, which is a functional currency of the entity. What is a functional currency? छोड़ दो, अभी आप मत सोचो. We'll discuss what is functional currency when we'll discuss Ind AS 21. Okay. Functional currency means report. For the time being, it is the main currency. It is the currency in which the transactions are entered, recorded, and the reported. Okay. Now, friends, my dear friends, how this cash balance will look like into the balance sheet. How this will look like into the balance sheet? Cash and cash equivalent. March 2026, March 2025, March 2026, March 2025, right? So 10,000 into 85 and 10,000 into 95 right? 95. Okay. So friends, you can see the opening cash and cash equivalent on 31st March 25 was 8.5 lakh and the closing cash and cash equivalent on 31st March 26 is 9.5 lakh, right? And you can see the movement in the cash and cash equivalent. You can see the movement in the cash and cash equivalent. But tell me whether this cash and cash equivalent is having any change. Whether this cash and cash equivalent is having any change. No, this cash and cash equivalent is not having any change. कोई change नहीं है cash and cash equivalent में. There is no change in the cash and cash equivalent, right? So how should we disclose it, right? So this 8.5 to 9.5, this 1 lakh rupee just because, so the changes of rupees 1 lakh is just because of change in the forex rates, right? Otherwise there is no change in the cash and cash equivalent. There is no change in the cash and cash equivalent, right? There is no change in the cash and cash equivalent. Okay. You agree with me? Agree or not agree with me? There is no change in the cash and cash equivalent. Okay. So friends, since there is no change in the cash and cash equivalent, right? So standard says that the effect of change in exchange rate in cash and cash equivalent held in foreign currency should be reported as a separate part of the reconciliation of cash and cash equivalent. How? I will show you. Unrealized gains and losses arising from change in foreign exchange rates are not the cash flows. Okay. So now let's discuss with this example. Entity A, an Indian company, purchases goods for resale from France during January for 10,000 euro. Exchange rate was 70 on a credit period of 4 months. Indian company purchases goods मतलब inventory account debit to foreign supplier account, foreign vendor or creditor account. So 10,000 rupee was the value euro, and multiply by 71 euro equal to 70 rupee, means 7 lakh rupee, right? 70 into 10,000, 7 lakh rupee. It accounted for the purchase of inventory at 7 lakh rupee. It is written on 31st March, the exchange rate has changed to 1 euro equal to 65 rupee. So while this inventory remains, this payment to supplier was there in the closing balance also, and this euro exchange rate, euro INR to euro, changed to 65 rupee. This means an unrealized gain due to exchange fluctuation of 50,000 rupees. You passed an accounting entry, inventory account debit to foreign supplier account 7 lakh rupee. Now you're restating at 6.5 lakh rupee. So what you will do, you will debit foreign supplier by 50,000, credit P&L, not inventory. Non-monetary item are not going to be restated. Only monetary item are going to be restated. Okay. So foreign supplier account debit 50,000 to unrealized forex gain, okay, 50,000. The payables will be recorded at 6.5 lakh at closing exchange rate, assuming that inventory is unsold at that date. The movement is reported as under. So friends, assuming no any transaction is there, what will come into the P&L in your profit? This unrealized gain of 50,000 rupees. So 50,000 rupees of unrealized gain, and then you have to do a movement, increase or decrease in inventory. Assets have been increased. If your assets are increasing, like your debtor was increased, it means negative cash flow. So your inventory has increased, negative cash flow. Your liability has also increased because it is on credit basis, the inventory to payable. Your liability has been increased from 0 to 6.5 lakh. So when your assets are increasing, you are seeing negative cash flow. When your liability is increasing, then reverse, positive cash flow. It means you are not paying cash or you are getting cash. Okay. 6.5 lakh. So profit before tax 50,000. Then no, I am assuming no items in the P&L as per this question. Then we got so we add non-cash item, non-operating item, nothing is there. Then what we did, changes in cash and cash equivalent. Okay. So changes in cash and cash equivalent is, profit before tax, add non-cash item, non-cash item, and the non-operating item. Then friends, if you see, how this transaction, how this has to be reported. If you see, this has to be reported in this manner. Your profit before tax. Let me show you the complete picture. Your profit before tax is 50,000. Now there is an unrealized gain. This unrealized gain is a non-cash item. You will do the adjustment. What you will do the adjustment? Less unrealized forex gain 50k. Unrealized forex gain 50k. Okay. Yes or no? You will do unrealized forex gain 50k. Right? हाँ या ना? ये अनरियलाइज फॉरेक्स गेन 50k होगा या नहीं होगा? होगा ना या नहीं होगा? यस, इट विल बिकम 0. कैश फ्लो बिफोर changes in working capital is 0. Right? Now your increase in inventory, what is your increase in inventory? Your inventory was recorded at what amount? Your inventory was recorded at 7 lakh rupee. Your inventory was recorded at 7 lakh rupee, right? And your payable, what is your increase in payable? Your inventory was recorded at 7 lakh rupee. And what is your payable? Your payable is again increase in payable, 6.5 lakh rupees, 6,50,000 rupees. Okay. So friends, net, what happened? Net, this 50,000 rupees of, this is the negative cash flow from 50,000 rupees, negative cash flow of 50,000 rupees. So this has flown. So while it is showing it as 0, how it is showing it as 0? It is only talking about the movement, right? But technically speaking, if the profit is 50,000, unrealized gains of 50k also has to be shown. Okay. But if I look at this entire inventory, Don't you think this 50,000 adjustment has to be made here also? Right? Technically speaking, this inventory was on credit basis. Technically speaking, this entire inventory was on credit basis. The 50,000 rupees of unrealized gain you have already reduced, right? So net, what is my cost to inventory? Net. What is my cost to inventory? 6.5 lakh. Net, my cost to inventory is 6.5 lakh, right? So this is what they have done in the question. This is what they have done in the question. They include this 50,000 here only. They include this 50,000 reduction here only. Okay, right? But what you can show? You can show increase in inventory and increase in payable by net 6.5 lakh rupees, so that your net cash flow from operating activity will be zero. और वैसे भी जीरो ही है ना, आपने कुछ लिया दिया तो है नहीं. Assuming entire transaction is P&L in zero, what is your net cash from operation? Please tell me. कितना कैश आया और कितना कैश गया? Apply direct method. Apply direct method. It is zero na. So in the question, this 50K has been included here. What you can do alternatively? Alternatively, what you can do, you show 50K profit, you show adjustment of 50K, and then your net changes in inventory and payable will be zero. Means 6.5 you can show. Okay. Any challenge, any doubt here? Any challenge, any doubt, friends? Any doubt, any challenge? Now, how you are required to show it? Let me show you how you are required to show it in the reconciliation of the cash and cash equivalent. Let me show you. Just a minute. Illustration number 10. An entity has bank balance in foreign currency aggregating to USD 100. An entity has a bank balance in foreign currency aggregating to $100, equivalent to 4,500 rupees at the beginning of the year. Opening cash and cash equivalent 4,500 rupees. Presuming no other transaction taking place, the entity reported a profit before tax of rupees 100 on account of exchange gain on the bank balance in foreign currency at the end of the year. Assuming no transaction taking place, the entity reported a profit before tax of rupees 100 on account of exchange gain on the bank balance in foreign currency at the end of the year. So there is 100 rupees of gain. Okay, due to the exchange fluctuation, due to the exchange gain. What would be the closing cash and cash equivalent as per the balance sheet? What would be the closing cash and cash equivalent as per the balance sheet? If 4,500 is the opening cash and cash equivalent, there is 100 rupee of exchange gain, then tell me what should be the closing cash and cash equivalent, my dear friends? What should be the closing cash and cash equivalent? क्या होगा closing cash and cash equivalent? Your closing cash and cash equivalent should be 4,600, right? It has to be 4,600. Okay. But how it has to be presented in the cash flow statement? See, in the beginning, this $100 is equal to 4,500 and no other transaction is taking place. There is a PBT of 100 on account of exchange gain, and the closing cash and cash equivalent. What would be the closing cash and cash equivalent for the balance sheet? So how it has to be shown? Let me tell you. Profit before tax 100 less unrealized gain 100. I told you na, I have shown you last time. I have shown you just before. Your PBT is 100, but there is a unrealized, there is a non-cash item. 100 has to be reduced. Cash flow from operating activity 0, investing 0, financing 0. Net increase in cash and cash equivalent 0. Add opening balance of cash and cash equivalent 4,500. And here only what you can do, add unrealized gain. This line item you can add here. Unrealized gain on foreign cash and cash equivalent 100 rupee, and this will become 4,600 rupee. That is one treatment which you can follow. Another treatment which you can follow, you can show it as a footnote to the notes to accounts. Okay, you can show it as a footnote to the notes to accounts also. Any doubt, any question here? यहां पे आपका कोई क्वेश्चन? My dear friends, any question? So Manoj, in this case, Manoj, are you there? So if you are not taking the adjustment in the cash flow statement itself, in the cash and cash equivalent portion, this is one of the area where your cash and cash equivalent will be different than the cash and cash equivalent as per cash flow statement. Okay. But technically what companies normally do, they keep this line item in the reconciliation of cash and cash equivalent. Okay. Like I told you, no, this line item can be shown in between the opening and the closing cash and cash equivalent also. Right, my dear friends? Can I go back to the specific points? Yes. No netting of inflows and outflows, my dear friends. The company has taken a term loan of 10 crore during the year. The company has repaid 4 crore during the year. How you will show it? The company has taken borrowing for 10 crore. The company has repaid 4 crore borrowing during the year. How will you show these transactions in the cash flow statement? Tell me. Net 6 crore. You will show the borrowings taken net 6 crore, right? Right? If you will show net 6 crore borrowing taken, will it reflect the right picture? Will it reflect the right picture to the user of the financial statement? No. So standard says that no netting of inflows and outflows. If you have taken a borrowing of 10 crore during the year, you have to show borrowings taken, loan taken 10 crore and repayment of borrowing 4 crore. These two transactions has to be shown separately in the cash flow from financing activity. Okay. But sir, if there is a cash credit limit, every second day I am taking a limit, every third day I am paying. During the year, I have hundred of transactions for taken and payment. So will I show all taken as one line item and all payment as one line item? Answer is no. If there is a large volume of transactions, it is just acted like a running account, then you can do the netting of cash flows. Then the netting is permitted. Okay. Then the netting is permitted. But in case of loan like term loan, right? Where there are limited transactions, are you getting me? The substance and the intent. You have understood, right? If it is relating to the working capital management, there is a large fluctuation in the balances during the year. You can net it off. But like loan which you have taken, you are paying installment, you are paying some upfront payments, you are paying some ad hoc payments, right? In that case, it has to be shown separately. Income tax cash flows. Generally, it is reported as operating cash flows, but if income tax is relating to some specific line item, specific activity, it has to be shown there only, right? I will cover it in my Excel file in detail. Non-cash transaction. If it is a non-cash transaction, it will not be included in the statement of cash flows, but the non-cash transactions are required to be disclosed in the footnote to the statement of cash flows. Acquisition or loss of control of a subsidiary, we'll discuss that. Changes in ownership interest in a subsidiary. So acquisition or loss of control in a subsidiary, right? So whenever you acquire a subsidiary, you have to show it as a investing activity. Whenever you lose control over the subsidiary, means sell the stake and you are losing a control, then it is also considered as an investing activity. But if there is a change in the interest of the subsidiary, but you are not losing control, for example, you invested 100% in a subsidiary, you sold 20% stake in a subsidiary, will you lose control? Earlier it was 100%, now it become 80%. Will you lose control? No, you will not lose control. You will not lose control, right? So my dear friends, if it is a changes in ownership interest, which is not resulting in loss of control, it has to be classified as a financing cash flow. Okay. Friends, let me take you on the Excel file and discuss this dilution of stake and this dilution of stake and tax example, right, in detail. Various scenarios in case of acquisition and dilution of stake. The company A Limited has invested in the shares of B Limited. The company invested 40% of the B Limited. The company invested 40% share in the B Limited. What is the nature of the activity? Investing activity. 80% then. So in the 40%, no control is there. Only investment. Even it is 1% investment, it is investing activity. Now the company has invested 80%. It obtained control. It is investing activity. Now the company obtained 100%. Again, it's a wholly owned subsidiary. It is investing activity. So investment is very clear. Whatever you invest is an investing activity. Disposal. Now the company has disposed 40%, right? The company has disposed. So company has acquired 40% stake. It was an investing activity. And the company sold the stake. The company sold the entire stake. The company sold the entire stake. It is also an investing activity. Now, company has acquired 80%, right? B, scenario number B. And the company sold the entire stake. The company sold the entire stake. It is an investing activity. But in the second scenario, the company sold only 10% stake. The company sold only 10% stake. Case 1, case 2. The company sold only 10% stake. So company was having 80% stake and company sold only 10% stake. Saminathan. Whether company lose control? Whether the company will lose control? No. Manoj? Having 80% and losing 10%, whether company will lose control? Answer is no. So this 10% sale of stake, Manoj, will it be financing activity or will it be investing activity? The standard says that whenever there is only change in the ownership interest, which is not resulting in the losing of control, it will be considered as a financing activity. It means you have sold the stake because you were in the need of the business, you were need on the money. So that's how you sold the 10% stake. So this is what standard says that it has to be shown as a financing activity. Now, third example, the company has purchased 100% stake. But company has purchased 100% stake in a company B. Now, company sold the entire stake. What is the nature if the company sold the entire stake? What is that? Investing activity. The company sold 60% stake. The company sold 60% stake. So company sold 60% and lose control. The company have lose control. So if the company has lose control, it will be an investing activity. Company sold only 25% stake and have not lose control. Company has sold 25% stake. From 100% it comes to 75%. There is no loss of control. It will be considered as a financing activity. Is that clear? It will be considered as a financing activity. Is that clear? Not clear? Financing activity. So whenever there is no loss of control, it is only change in the ownership interest, it will be considered as a financing activity. Manoj, Rajat, Rohan, clear? Not clear? Charita, Kanhaiya, Ravinder, Shailendra, Abhijit, Banu. Yes, clear to everyone? Okay, now let's go to the important note on tax flow treatment. On tax flows, not cash flows, tax flows. Okay, tax flows treatment. If cash flow on account of taxes is not determinable, that how much belongs to which entity, which activity. Okay, so there is a tax flow. For example, the company has sold fixed asset. The company has sold fixed asset, PP&E. Then if there is any tax on the PP&E, what is the nature of that tax? Is it a capital gain or is it a normal operating activity tax flow? आपने बिल्डिंग बेची, आपने PPNE बेचा, it will be a capital gain. It will be a capital gain. And capital gain will have a special rate, right? होता है ना वो 10%, 20%, 12.5%. So there are investment. So you have sold shares, you have sold mutual funds. So whether it will be a capital gain or it will be a normal kind of a taxation, it will be a capital gain, right? It will be a capital gain. Okay, friends. But what happened if you are not able to determine that this tax belongs to which activity? Then standard says that entire income taxes has to be shown in the operating activity. If a specific impact of income tax is determinable, then it is required to be shown in the respective heads. For example, the company has a profit of 2000 crores and 1000 crore belongs to the sale of shares in mutual funds. And on this 1000 crore of sale of shares in mutual funds, when the company prepared the computation of income, 200 crores belongs to the taxes capital gain on the sale of mutual funds. The total tax is, let's say, 500 crores. But 200 crore belongs to the sale of mutual funds, capital gain on mutual funds. Now, friends, the sale of mutual fund, this is an operating activity or this is an investing activity? Sale of mutual fund is a investing activity. So if it is an investing activity, where the tax of 200 crore will go? Investing activity. How it has to be shown? Let me tell you. Total income tax is paid 5 lakh. Capital gain on sale of mutual fund 1 lakh rupee, investing activity. Tax on account of dividend paid 2 lakh rupee. Dividend paid, is it a financing activity or investing activity? Financing activity. So there is a DDT which you have paid, dividend tax paid 2 lakh rupee. So how it has to be shown? 1 lakh pertains to investing, 2 lakh pertains to financing. It means remaining 2 lakh pertains to operating activity. So for example, your cash flow from operation is 10 lakh, less income taxes paid. So this is assumed. This number is assumed. So 8 lakh rupees cash flow from operating activity. Cash flow from investing activity assumed. It is 6 lakh rupee. Less income taxes paid, net cash flow from investing activity. Cash flow from financing activity assumed. It is 7 lakh rupee, right? 7 lakh rupee. Then income taxes paid 2 lakh rupee. Your net cash flow from financing activity is 5 lakh rupee. Okay. It is 5 lakh rupee. Is that clear? Is that clear, my dear friends? Yeah. Very much clear. Taxes treatment also. So these were some specific item like foreign cash flows, no netting of inflows and outflows, right? Non-cash transactions. Okay. So treatment of taxes, right? Then your acquisition of investment and dilution of investment. Okay. So acquisition of investment is an investing activity, but dilution of investment, which is not resulting in loss of control, is an investing activity. Sorry, is a financing activity, which is resulting into the loss of control, is a investing activity. If the control is not lost, it is a financing activity. But if control is lost, it is an investing activity, right? Okay. Now, friends, I have also given you a specimen cash flow, which you are already aware. So if you see the cash flow from or used in the operating activity. So this is how we present it. When the cash flow is incoming, it is known as cash flow from. When it is going, it is known as used. Profit before tax, we assume 1000 crores. Provision for bad debt, we assume 30 crores. 20 crore is depreciation, impairment, unrealized forex, right? So what we have done, we did the adjustment of add or less non-cash item. Then add or less investing and financing activity item means non-operating item. Non-operating item. Where these item will go? These item will go to the investing and financing. For example, interest income received. While it is cash item, but it is a non-operating item. Okay. For example, interest received, interest paid, etc., etc. Okay. So this 100 is what? This 100 comes here. Add or less investing and financing activity item. Okay. So this is this 80 is what? Oh, just a minute. What I did. So this has to be sum of this. Okay. 50. Okay. 950. Operating profit before changes in working capital. So like decrease in current asset means positive cash flow. Increase in current assets, negative cash flow. The increase in current liability, positive cash flow. Decrease in current liability, negative cash flow. So let's say if you go to annexure 1, this annexure 1 is the debtor, right? For example, annexure 1 is relating to a debtor. Annexure 2 is, for example, relating to the other current asset. Other current assets. Other current assets. Okay. So opening debtor was 100, sales was 50, collection was 90, closing debtor was 60. Your debtor is decreasing. Your debtor is decreasing by how much? Your debtor is decreasing by what amount? Your debtor is decreasing by 40 rupee. Means you can see you made a sale of 50, but you collected 90, means more cash come in, more cash come in. So decrease in the current asset, decrease in the current asset. What you will do if there is a decrease in the current asset, then you have to show it as a positive cash flow. Vice versa, increase in the current asset. For example, other current asset. It was opening 100, sales was 50, but you received 30 only. Your closing debtors have increased, your closing current assets have increased. Increased current asset means negative cash flow. So here, this minus closing -40. Increase in current liability. For example, there is a creditor. Annexure 1. Annexure 1 is on creditor. Annexure 2 is on other current liability. Other current liability, right? Other current liability. And this is your creditors. Creditors. So your 100 rupee creditor was there, opening balance. Purchases was made for 60, but you have made a payment only for 20. Your creditor balance has increased. It means you have less paid, means your positive cash flow, right? So increase in current liability will also increase in current liability is a positive cash flow. Increase in current liability is a positive cash flow. Just ulta of the decrease, ulta of the increase in current asset. So increase in current liability is positive cash flow. Increase in current asset is negative cash flow. Annexure 2. Your other current liability has been decreased. Other current liability has been increased means you have paid more cash. You have paid more cash. You have paid more cash, right? So negative cash flow. So friends, if you see this, this will be your operating profit before changes in working capital. This is your working capital adjustment. This is cash flow from operations. Income taxes paid is, let's say, 300. This is your cash flow from operating activity. Now, what is my cash flow from or used in investing activity? Purchase of PP&E, proceeds from sale of PP, invest in mutual fund or bonds, interest received, dividend received. This is my cash flow from investing activity. Then my cash flow from or used in financing activity, equity share issued, loan taken from bank, dividend paid, interest paid. This is my cash flow from financing activity. Now, net cash changes from all the activities, A plus B plus C is 3150. Your opening cash and cash equivalent is 250. Let's say your closing cash and cash equivalent is 3400, which has to be tallied with the balance sheet. When it will not be tallied with the balance sheet? Number one, when there is a bank overdraft. Number two, whenever there is a forex cash and cash equivalent. So in that case, if you will show it, the unrealized gains and losses on the forex cash and cash equivalent, then of course it will tally. Otherwise, it will tally from the reconciliation. Friends, I hope you have enjoyed this entire, chapter of the statement of cash flows. Let me know if you have any question. Cash and cash equivalent. I will share this Excel file as well as PowerPoint presentation, right? I have shared this. Okay. Yeah. Any question, friends? Any question? Any question, my dear friends? Let me know if you have any question. Yeah. No question? Manoj, Saminathan, anybody else? Yes, on the cash and cash equivalent, on the operating activity, investing activity, financing activity, tax treatment, investment treatment. Any question? Yeah. Okay. Why did add bank OD in cash and cash equivalent, Ravinder? Ravinder. So generally, bank overdraft is treated as a, what standard says? Standard says that bank overdraft will be treated as part of cash and cash equivalent if it is part of the cash flow management and it fluctuates from positive to negative. Means normally bank overdraft is treated just like a bank balance. You are issuing check, it is getting honored, you are depositing money into the bank, right? It is more like a banking operations. Okay. So that is why, since it is an integral part of cash management, that is why standard says that for the purpose of cash flow statement, you will not show it as a borrowing. You will not show it as a financing activity. You will show it as a what? As a cash and cash equivalent. You will show it as a cash and cash equivalent. That is what standard says. Okay. So because in IFRS, in IAS 7, this treatment was there. So we have taken the same treatment in IAS 7. And my dear friends, first of all, thank you so much. So many of you have wished me Guru Purnima in the beginning. I have not responded. So thank you so much and bless you all, right? And may you succeed in future and you become a chartered accountant with flying colors, right? Thank you. God bless you. Thank you. Bye. Take care.
Okay, students, sir, I would also like to address students. It's really great that students are giving such wishes, and for your all best wishes as well. Students, I just want to announce one thing. We have come out with the stakeholder feedback suggestions, which we are inviting from everybody. So we are taking you also as one of the stakeholders, very important stakeholder. So CA final students have also been invited to give their suggestions on the current scheme of education and training, and what you believe should be your proposed scheme of education and training. So we are just trying to review the existing scheme of education and training. With respect to that, we are asking your suggestions, your opinions, and based on that we'll try to revise the existing scheme. So in that, for that purpose, we have sent a mass mail to every student, CA final students, and we request you all to fill that, spare some time and fill that feedback form. And also, just for those who have not noticed that this mass mail has been received by them, please ask them also to fill. You can also forward it through to your friends also who are CA finance students. We'll do one thing, in the WhatsApp group which we are having, they will post this link so that you can just access that link from WhatsApp also. Okay. So it is very necessary, and we request everybody, those who are there, or we'll try to announce that in tomorrow and day after tomorrow's class also, so that everybody get the access of this. Okay. Any other query you want to know from me regarding Board of Studies working or operations, you can just ask me. Acha, Ravinder is asking to add me in WhatsApp group. Yeah. Acha. So, Ravinder, we'll be just we are working on something, so that's why you have not been added. We'll do this in 2 to 3 days. We'll share the link to join that WhatsApp group. Okay, just wait for a minute. Then in that case, tomorrow or day after tomorrow we'll work it, na ma'am, when the previous classes notes will be uploaded in BOS. Okay, actually, I'll be doing it today. I was doing it yesterday I completed LVRC notes and assignment supplement. Today I'll do for LVC. Okay. Anything else? Okay. Okay, thank you, students. Thank you. Thank you, everyone. And hope you all are continuous to just maintain this continuity and consistency. And this class, after the class, whatever practice is required, and it is very necessary that whatever you are learning during this class, just after the class, after a few hours break, if you're not going for your practical training, then please study whatever the concepts has been taught today. This will help you in understanding in a better manner, and it will also give you a good practice, and it will register and retain in your mind for a long period. Okay. For feedback, one more thing, students, feedback form, we in my first session also I requested everybody that please fill the feedback form on session wise basis, huh? For every session, even if the topic is being continued, like for this India's one continued for 2 sessions, then I request everybody to fill the feedback form for both the sessions individually and separately, not for after completion of the topic. Okay, don't wait for completion of the topic, fill for every session. So please, I request everybody, those who are there, just fill the feedback form so that we get an understanding about your expectations and what more we can provide you. Okay. Feedback form, the link for feedback form will get in your BOS knowledge portal. After login, you'll find feedback form separately for LVC and separately for LVRC. So for this, because this is LVC session, so for LVC session, you have to fill that LVC feedback form. Okay. Any other thing, students? Then thank you. We'll wind up the session. Session is over. Ha.